What's up, everyone? I'm just getting stuff set up in the background right now, so enjoy some tunes, some heat maps, and some charts. We'll be doing the full live stream. We'll actually be starting at 1:45 p.m. Eastern Time. 2 p.m. is when they announce the rate hike, and at 2:30 p.m. is when Jerome Powell comes out, gives his statements, and will tell us about the forward-looking view of the Fed. All right, we can definitely see a little bit of pre-Fed announcement pump going on. Got the chart of XRP up on the screen right now, and you can see XRP over these last 10 minutes or so moving on the way up. And then also, let me get rid of that here, make that a little cleaner. XLM also doing the same thing. I got Cardano up there, pre-pump as well, leading up to the Fed's announcement. Yeah, real quick. I just had someone ask a question, about stuff on Lobster, and I'm just getting stuff set up in the background, everyone. I'm just trying not to go full cam and all that. But honestly, I did a story yesterday, and it was about 97.7% of stuff on Litecoin was just rug pulls, right? Scams and junk. And I got to be honest with you, I have a very, very similar sentiment when it comes to stuff found on Lobster. I think the majority of it is crap, and I don't think it's worth a lick, honestly. The big problem is you can mint stuff so easily on the Stellar chain, right? It's so inexpensive to do. It's so, oh, sorry, I'm just putting a hoodie on here because I'm freezing. It's so just, I don't know, it is. It's very, very easy to do, and it's cheap, so I know I don't trust things on Lobster. God's honest truth, I don't. It was one of the funniest ones. You guys are going to love this. So I was doing a story a while ago on USDC. Yeah, Lobster, LOBSTER. But I was doing a story on Lobster, and it was, whoa, hey now, what is going on here? Sorry if you guys lost my connection. Sorry about that. But anyways, I did the story on it, and it was just a bunch of garbage. I mean, seriously, it's just a bunch of garbage found on there. So, no, I would not hang out with Lobster. Twitch is chiming in saying, I would buy mine from Qcoin personally. Yeah, I get you on that. Totally understand that. Thomas Vandersman says, should Ripple in the SE settle out of nowhere and we won't have to wait until next year for a major pump for XLM and XRP, you think? Let me just go to my studio settings here. I can change this out. All right, here we go. Back in the way that I am used to it. What's up, everyone? A little early. That's not the formal start of the stream, but I mean, I guess we could start now. I was gonna try to sneak a shower in because I just got done working out, and it's like, oh crap, man. Real quick, how's the sound on everyone right now? Let me know how the sound is through the mic. My input sound came out pretty good, but yeah, let me know how the sound is on the mic, and yeah, we'll start getting into it. I actually got a few things that I want to talk about before we get into Jerome Powell and the Fed. Now remember, the Fed announcement will be happening at 2 p.m. Eastern time. That's when they actually announce what the basis point hit is, okay? So at 2 p.m., I'm going to be laser focused, right, on the individual charts. And thank you, Michael Chavez, for chiming in with the sound. Thank you, Eric. And so what I'm going to be looking at 2 p.m. is this. I'm going to be looking at what happens at the moment that Jerome Powell and the Fed dumps it, right? When he slaps his meat on the table, and you guys know the meat I'm talking about, right? When you just take it and you just slap the meat on the table and say, hey, this is what I got. When he slaps it on the table, what happens at that? Ooh, Nico says, très bon. Thank you very much. Merci beaucoup, mes amis. But anyways, that's what we're looking at. The other thing we're going to look at too, all right? And this is, I think, the bigger one, and this is where I want to get everyone here. I can add a little bit. You want me to add a little bit more? I can add a dB in here. Give me a second. Let me go to that. Let me I have it at negative 4.3, so I'll crank it up just a little bit there. Let's go back down to 3. Let's see if there we go, 3.2. All right, cool. That should be pretty good on the sound at DVR. So yeah, so at 2 o'clock, we're going to watch the actual market reaction happen. What happens the moment that basis number gets launched? Then the big one at 2:30 is Jerome Powell, his forward-looking statements, all right? He's going to be talking about, hey, what information they use to make this decision and what they're looking at going forward. He's also going to give us kind of some hints on what his plans are. So again, 2:30 then is when the big one comes in. That's when the market, I think you're going to see even more movement at that point in time. We're going to be like, hey, is the Fed going to stay strict? Is he going to hint to a 75 basis point hit? And what's up, James Fairview? How are you doing? Party Farm chimes in. My guess is 0.5. What was the last rate hike? We have seen 75, 75, 75, 75. That is 4 in a row, gents. Yep, 300 basis point increase over the last 4 meetings, everyone. And real quick here, while we're talking about meetings and all the kind of crap that goes on with that, let's also not forget that there is another meeting coming up here. Give me 1 second. We've got CPI data coming out November 10th. And remember, that's what the Fed uses, everyone, most of their stuff. They're also going to use some beige book action coming in later this month. But there's an FOMC meeting on December, I'm trying to remember what day it is, December 13th to 14th, all right, is the next time the Fed meets. So we've got quite a few big macroeconomic events coming up, just to make it, you know what I mean, just kind of spicy. Twitch chimes in saying you should get a voice changer up on the thing for when you do your fun live stream. I think he's going to be neutral. Ooh, interesting. I think they're just going to repeat the same crap we already know and stay the path, stay neutral overall. But who knows, he might have a slip up. Well, remember, everyone, all right. So for those of you that have watched the Jerome Powell Fed rate hike thing, okay, and the CPI data stuff, we have broken it down, not just the price, okay, but we've broken down his body language, his tone. You could tell the last Fed meeting, when Jerome Powell came out the last time, and he said to the market, yo, I'm putting another 75 basis point hit down on you, right? He did it so calmly. He didn't have any fear, nothing. It was weird. He was like, seriously, it was almost like he was annied. Like, seriously, like Jerome Powell, before he went up on the podium, before he went out on the mic, Jerome Powell just broke up a ladder and was like, yo, I need to chill it just a little bit. He did. He seemed really cool. Now, the time before that, he was nervous, man. When he announced rate hike 75 number 3, he was shaking. He was visibly shaking. You could hear it in his voice even, too. So I think not only is it, what does he say? His body language and how he says it is going to tell us a lot, and investors are going to read in between the lines. Now, when it comes to CPI data and all the ugly goodiness that we got, well, we've got the breakdown right here, and some of the stuff came out bad, all right? Some of the stuff, and real quick, just to highlight it, food at home came out horrible. Look at these rates. Cereal, 16%, dairy 15.9. I mean, that's these are prices that are affecting people out there quite heavy, everyone. So yeah, just stuff we all have to pay attention to. But like I said, Jerome Powell, Jerome Powell and the Fed are going to be dropping their rate hike today. We're going to see what the markets did. Now, I did a video earlier today. If you hadn't seen it, I'm going to totally recap you on the video because it's super important. All right. The last time the Fed announced a rate hike, okay, the last time the Fed dropped the 75 basis point meat on the table, remember what happened. XRP, XLM, our utilities, they took off. Bitcoin and Ethereum sank. That's what happened right here. See the purple arrow? Yep, made it easy for everyone. That is the action that happened the last time the Fed announced it. Now, if you go to XLM and look at the same thing, let me just zoom out so you can see it. Ooh, buddy. XLM's on September 20th. Let me get that for you. That's this movement right here. All right, that's what XLM did right there. That again, not as big of a movement as XRP. We've seen that XRP has definitely been having a little bit juicier action, to say the least. And let me move this around just so you guys can see what I'm talking about. So the movement, right, for XLM, let me get it for you right here, is this one. All right. So that's the movement that day that happened when Jerome Powell and the Fed announced. So that's what we're looking at today, everyone. If you've got questions, if you've got comments, now is the time. Messy Leo chimes in and says, hello, bro. Great show. The only reason my show is a great show is because I've got great fans that honestly give me feedback and give me motivation to keep doing stuff like this for you guys. Swear to God. I do this stuff 7 days a week now, and I love it. I really do. I love this kind of stuff. Now, what are some of the things we've noticed? Check this out. Leading up into this, okay? Leading up into this, you can see ADA had a little mini action going on, okay? If we look at XLM right now, let's get that back down in the 1 day. See, okay, a little action here, nothing crazy. XRP, let's go back to the 1 day and look at what's going on. XRP had some action. So we're definitely seeing more positivity in the ways of XRP. All right, now what we need to do, though, we need to look at the market a little bit different leading up into this. We're going to play with some numbers here, all right? We're going to show everyone what's going on. All right. So right now, on the heat map, I have performance over the last hour, and I have the block size on volume. The reason I want to focus on volume is what's banging and moving in the market right now, and what is the near-term performance. Now, if we look leading up to this, okay, watch what happens in the heat map. Don't freak out, everyone, okay? Watch what happens. When I switch this out to the day, you can see, yep, the redness starts showing up in the 1 day factor with a lot of these out here. Again, you switch it to the hour, we're going to go mostly green. So there's positivity leading into this, and that's why you have to switch your heat map up to the 1 hour time frame. You have to see, is the money out there positive leading into what Jerome Powell and the Fed are going to do when they drop the meat on the table? All right, everyone? That's why we got to follow this. And what we have to look at is we have to look at what happened a month ago, or I'm sorry, about a month and a half ago when Jerome Powell was out. The last time Jerome Powell was out, XRP and our utility cryptos took off. Bitcoin and Ethereum went way, way down. And in fact, let's do this. Let's go here. Let's open this one up and let's open up our Bitcoin because, hey, you know what? Why not? Let's go to Bitcoin and let's show everyone right here. So when that action happened with Bitcoin, there you go. There was nothing. There's the 20th. Nothing. Nothing happened on Bitcoin on the 20th when the Fed stuff, but look, XRP and the utilities took off. Party Farm says Litecoin went up like 10% last night. Yeah, Litecoin has definitely been seeing a lot of action too. Litecoin, what was the other one? BNB has been moving a lot lately. Oh, and the BNB thing, I don't know if you guys saw this, but BNB, right? They're out there saying to Elon, hey, look, we put $500 million into helping you with Twitter. You maybe should start using BNB for payments for verified Twitter stuff. So interesting out there is now we're seeing social media pull there's a utility to it. Elon wants to charge people $8 a month to be verified user on Twitter. He thinks that'll get rid of a lot of the bots scammers out there, the fake verified where you pay for it type thing. And what's interesting about that is they're going to do it with blockchain. So it's like, what blockchain is going to be used? Who's going to get the pump out of this? Is it BNB? You know, is it going to be the Doge action? I don't know. It's very interesting to see here. What Elon's doing, you might not like the guy, but he's a very disruptive force. He's making big changes happen in short periods of time. And honestly, right now, that is what we need in the United States. And no, of course, this is not financial advice. Nothing on YouTube is financial advice. And just to let you guys know that whole, like, this is not financial advice thing, they had a court case that came out and they were like, yeah, that doesn't mean anything. Like, it doesn't mean anything. It's really interesting, really interesting. But anyways, right now we are waiting for Jerome Powell and the Fed to come out. You know what? Let's open this up. Let's load up inflation data, United States, and let's go to our favorite trading economics chart here, and we're gonna see this is the inflation data chart that we are looking at right now, everyone. All right, when we look at inflation, when we look at Jerome Powell, the whole point of these meetings, all right, the reason why Jerome Powell is coming on at 2:30 is to talk about inflation. And it has to do, and I'm going to move this over just so it's a little easier for me. It has to do with this. The Feds want these numbers that you see here in these blue bars. They want these numbers to get to 2.0. 2.0. Let that sink in as we are at 8.2 right now. Crazy stuff, everyone. Patriotist1 chimes in, says, I'm looking XRP and XLM make me retire when I turn 30. In Patriotist1, by the way, did you see that your comment was in the Big Dates video? Yep, I put you in there because you were kind enough to comment on that Big Dates video. So thank you, Patriotist1. Nico chimes in saying, I remember meeting somewhere that CZ and Elon are college buddy, apparently. You know, what's interesting about this is that these connections are all over the place. The money roots are tied and tangled in everywhere. And even if they didn't meet in college, they met at some swanky, weird place where it was $10,000 a person to get in, and they made their handshakes. But the big stuff we have to think about, Jerome Powell is going to keep increasing the rates until this number here on the screen, these blue bars, get down to 2.0. That is the Fed's target rate. Now, to give you guys all an idea of how bad inflation is in the United States. And remember, what I say about inflation in the United States, remember, we can apply this to the rest of the world, right? UK record inflation. Canada's crazy inflation. I'm reading about it all over the place. So when we zoom out just that little bit, look at how low inflation was for such a long time. Look at this. 2018, we were rolling, 2019, 2020, and then, oh, look what happens. Things just got out of control. The Feds want this number here, right? This chart right here. They want it to come down to this 2.0 level right there. That's what they want. They want it to come down right here. So we've got a ways to go. The market right now is fearing one big thing, everyone. The market is fearing that inflation, all right, and I'm just going to put this over here just on the side just so I can see real quick. All right, sorry, just want to take a quick peek. But what the market is looking at right here is this. How fast are we coming back down? And right now you can see it. We shot up quick, but almost kind of looks like we're leveling out a little bit. So the next CPI data, right? The next thing that we have to look for CPI data when we get the next thing, that is going to be November 10th at 8:30 a.m. Eastern time. All right. So what we're looking at is the Fed is going to keep raising rates until these rates get back down to 2.0. And Jimbo Tango, thank you very much, sir. I appreciate that. Jimbo Tango also chimes in and says 50 points is his guess from the Fed. All right, actually, let's go to that. And again, thank you, Jimbo, for supporting the channel. I greatly appreciate it, sir. All right, so if I look at the chart right now, I've got 75 as a good, healthy-sized hit. Looks like we got 63% of the people vote, or 63% are saying 75 basis points is the hit. Wow, crazy, crazy stuff, everyone. Gary Tollin chimes in, and what's up, Gary? Good to see you too, sir. Gary Tollin chimes in saying it's going to get worse. But again, thank you very much, Jimbo Tango, our fan from across the pond in Ireland. And Jimbo, I don't know if you caught this point, but what I was saying was that the chart we're looking at up on the screen is the inflation rate for the United States. And they're like, just because I'm referencing the United States, you know, you can apply similar things to Ireland. We can apply similar things to UK. When Ben chimes in, we could talk to him and bug him about England and all that stuff, right? We're seeing inflation across the globe at these high points. And what we're all looking for, all of our countries out there, okay, whether it's Jimbo in Ireland, all right, myself in the States, you know, what we're looking for is this number to come on down. We need world inflation to come down. Andy says, what would be a healthy time frame to come down to 2.0? As fast as humanly possible. Honestly, as fast as humanly possible. And I kid you not. All right, here's what I'm going to show you, Andy, all right? This is what we're talking about when it comes to fast as humanly possible, all right? We're going to blow this inflation chart up really, really big, all right? And this is going to be a history lesson for anyone out there that is younger than I am, all right? And by the way, No Shave November, everyone. Here, ASMR. Yep, No Shave November, by the way, started, remember? So for all the wives out there, for all the ladies out there that are like, oh, I don't like scruffy men. Well, you're going to hate No Shave November then. Ooh, I rhymed. I like that. But here's what we're talking about, Andy. You asked how fast should we want that 2.0, right? That target Fed inflation rate. How fast should we want? As fast as possible. Here's why. Look what happened in 08. We had an inflation spike in the high 5%, 5.5, 5.6, 5.8, somewhere around there. And then look how fast it corrected. It corrected fast, fast, fast. So then the Fed didn't have to react as much, all right? Now, granted, do we all want to go through what happened in 2008? No, that was a crazy housing crash, crazy financial crash. That was a complete mess, all right? But what we really want is we want this chart here to look as fast as it went up. We want it to look as fast as it went down. The faster, the better. The faster we get down to 2.0 for the Fed is the faster that the Fed is going to say, whoa, 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 whoa. We can pump the brakes. Maybe we only have to do, I don't know, a 25 basis point hit instead. Now, if the market starts seeing that a 25 basis points happening, they're thinking, well, wait a minute, maybe the Fed is cooling stuff down, which then hopefully brings that number down even further, and further. So realistically, fast. Fast is the answer. We want this to happen fast. But what we're seeing at the chart, and again, if I zoom in, all right, to the five-year time period, you see it here. It kind of flattened out up on the top. Kind of flattened out just a little bit. Ooh, Steve Favor says, I'll ticker her legs. Very well played, right? Flavor saver, my good man. No Shave November. Michael Lopez says, they will have to give up soon, but that is all part of the plan. Yeah, if you guys got questions, comments, you are welcome to chime in and let me know. Again, thank you very much, Jimbo Tango. I know I say thank you like a million times, but I'm super appreciative, and I never let any of this stuff get to my head. I'm always very, very humble. Let's get back to that heat map, because again, we want to keep an eye on the heat map leading up to this, okay? And the heat map, you know what? Let's go full screen heat map. The heat map right now we have is performance for 1 hour leading up to it, all right? 1 hour leading up to it, all right? And you can see that the markets right now are positive going into Jerome Powell and the Fed. This is telling me right now? This is telling me that the markets are expecting, all right? And this is how you could tell if you could see rallies happen or not, okay? That markets are expecting inflation data to come in less, that we're going to start getting down. Maybe we'll even be below 8. Now, How long do we have to wait for that? We have to wait until November 10th, everyone, to see if that happens. But right now, it looks like the market is positive getting into this. Patriotist says Bitcoin might go to 250 in the next bull run, but XRP has more potential. It'll probably be $30 in 2025. Yeah, it's, you know, when it comes to the money and movement, there's something I just want to ask everyone out there. When it comes to XRP, when it comes to, oh, hey, Jimbo, we got news for Jimbo Tango here. Hold on. News for Jimbo. I'm going to get to this, Jimbo. Just give me a second here. I just saw something pop up about Ireland, and we'll read it for you. But, you know, when people are talking about price, we have to remember right now, it is the retail markets that are fueling this stuff. It is U.S. news that is fueling most of the market right now, okay? And I know that sounds weird, but think about it. CPI data, all right? Like when we start looking at the charts, when we start looking at XRP, when we start looking at the likes of XRM, you will see that they react so heavily to news in the United States that it is honestly, the U.S. news ends up being like the biggest economic indicator. And what happens is these people use U.S. economic news as like a predictive indicator for what's going to be happening in the rest of the world. So, hey, if the U.S. kind of starts coming out of this inflation soon, guess what? Maybe the rest of the world will start following. That's kind of the logic that they're using here. Give me a quick second. Let me get a drink here. All right. Yes, Eric. What's up, Eric? How's it going? Eric says, hi, Klaus. Really sad to see how many people are hopeful the Fed will pivot as much as we all want. That's too much hopium. Jerome told us his plan is aggressive until we're at 2%. And that, damn it, Eric, you just stole my thunder, man. That's exactly what I was talking about, Eric. What I'm looking at is this, let's get this back just to the 5-year. Guys, what we need, this blue line right here has to come back down to 2.0. Jerome Powell said at the last meeting and the meeting before that, he is going to do whatever he has to get it there. That's crazy. That means if Jerome Powell now in December has to drop another hit, then so be it. Then he has to do it. That's the deal there. Syed says, hey, what's your take on Luna Classic? Honestly, I stopped following anything Luna related for this reason. Just hear me out. Why would I want to, and I'm not, this is not in a negative way, but just think about this in like a fundamental sense. Why would I want to hang any sort of attention on something, I guess, that it's like, I don't want to say it's nearing its days, but like the Luna whole experiment failed. You know, we've seen with the burn rate with Luna, there's just too many factors in there that I can't control, that I just don't want to get into it. So rather than saying how I feel about it, it's just not my thing. There's too many factors. There's way too many factors right now in Luna Classic for me to be able to be like, if I did it, it would be on like the super speculative end rather than the conservative end of a already super speculative asset. Michael Lope says, sounds like a madman. I don't know what sounds like a madman. If you could elaborate, that would be easy. But getting into it right now, we could see right now, last hour, all right? And let's just, oh, crap. All right, so we've got volume up here. You know what, let's get, all right, so wrap Bitcoin in the last hour is big banging volume-wise. Let's go to market cap just so you guys can see what's going on. So this is market cap for the last hour, all right? So you can see the movement. Yeah, markets, they're positively pricing stuff in, everyone. I mean, right now, what the market's saying is, hey, we expect 75, but then we expect Jerome Powell to say, hey, we may back off in December. So I'm kind of wondering here if that's what the market's telling us right now that they are pricing in. You got Bitcoin right now, everyone, sitting at 20,568. Ethereum 1570. XRP sitting at 46.3 cents. XLM sitting at 10.9. And again, the heat map that you see on the screen right now is over the last hour. We should be getting rate hike news from Jerome Powell and the Fed at 2 p.m. Eastern time. You bet your butt right at 2 p.m. we're going to see some movement here action. We also have this leading into the Fed announcement. Bitcoin is starting to see some actions right here. Oh, DVR just brought up something interesting. DVR says, what about the job report, supply chains, the pandemic, the war, energy crisis? Very, very glad that you brought that up. All right, so here you go, DVR. Here's the deal with that. Right now, everyone is focusing on inflation from the Fed, okay? The reason they're focusing on inflation in the Fed, that has to do with cash flow to families, all right? The U.S. economy right now is based upon spending, right? We are a greed-based spending economy, okay? That's how it works. Spend, okay? As the Fed raises rates, your credit card debt gets higher because the credit card rates, right, go higher. Home loans start going up because the home loans are there, auto loans, home equity line of credit, business loans, all of those rates start going up. Life just starts costing you more to borrow money. Now, if it costs you more to borrow money, that means you don't have much money to use for X, Y, and Z, and that's why crypto suffers. Crypto is the most risky asset class in the world, which means that the last dollar of an investor, all right, his last dollar will go into crypto versus his first dollar. His first dollar will go into his most stable thing that he has, you know, his least riskiest asset class, and his last dollar goes to his most riskiest asset class. So that's kind of how you have to look at crypto. Now, when it comes to Jerome Powell, when it comes to the Fed, when it comes to unemployment, remember, Jerome Powell and the Fed, as they raise rates, right, as they make the cost of doing business more expensive, what do businesses do, everyone? They let people go. Right? Layoffs, okay? So then what's going to happen is after you see the ripple effects, because remember, the Fed raising rates is like taking a rock and just chucking it into a pond and just watching it just splash, all right? There's going to be ripple events. Down the road, okay, a few months down the road into the next year, all right? We're talking very near term here. You're going to see unemployment numbers start going up because the cost of business is going up, right? How much it costs, right, for business loans, home equity lines of credit, home loans, auto loans, all that kind of stuff. Because that all goes up in price, businesses scale back. They scale back by letting people go. So when they let people go, unemployment goes up. They also cancel job openings, which means job availabilities go down. So what you have is this: unemployment up, job availability down. The Fed doesn't have to do anymore because they stifled the economy. The reason the Fed does rate hikes, the only reason the Fed does rate hikes, they don't have any other tools. They can't do anything else, anyone. Like, that's the big problem. They just cannot do anything else. So what happens is they have to stifle the demand side of the economy, which is us, all right? So everyone here, right? Everyone out here, all right, is affected by that. So what they're trying to do is they're trying to make life for us more expensive so we spend less, so that demand goes down, so that the prices then of these items start going down. That's what the Fed is trying to do with these rate hikes. Aaron Sandy, holy crap, Klaus says, how's Nevada doing since it launched on the Stellar blockchain? Yeah, that's a good question. I haven't looked at that. Let me give me a second here. Novati Group. All right. I don't see any action. Is this the same? Yeah, no, I don't see anything happening right now with Novati. Let's just blow this out 1 month. I mean, okay, so you had the pop on them the few days leading up into the stablecoin launch, but that's it. And now, mind you, this is for their Australian exchange for obvious reasons, everyone. But getting back into it, the Fed and Jerome Powell are going to be dropping the hammer here soon. We're waiting for that to happen. Until that happens, what I'm going to do, I'm going to grab a super quick, I got to refill this just so I can be good for the live stream. I'm going to pop on some tunes. I will be back in like a minute here, so give me a quick second. I'll be right back. I just got to get some fluids here for my voice because I have a feeling I might be talking a little bit. All right, sorry about that, everyone. I just needed to reload a little bit with some branch chain amino acids in my drink. Hold on. Oh, yeah, I got to mix up the branch chain amino acids so it doesn't taste like absolute dog crap, of course. All right, but there was a question that I saw in here that I want to talk about. Give me a second, everyone. All right, so what I wanted to talk about was this question right here. Oh, yeah, Jimbo wants to see me interview BitBoy. Dude, you almost made me choke. Don't do that. That's funny. Yeah, I would love to interview BitBoy as well. But anyway, I wanted to get to a quick question here, and it was to ask if I had any information about the BIS winners. I'm so glad you brought that up. No, I have not heard anything about the BIS winners. Okay, so the Bank of International Settlements did, there were 3 different questions they were doing. They had a contest, okay? And in that contest, there were different questions like how to use stablecoin deployment, stuff like that, right? Well, anyways, what happened was Stellar was in there with 2 people. They were submitting a project, and so was Ripple Labs. Now, what they said was, hey, we're going to let people know about the winners before the G20 summit. That was supposed to happen oh my God, that was supposed to happen a few days ago. They have yet to release that information, so I'm very curious on what's going on with that. So, and Freakzilla, hey, what's up with you? Jimbo Tango says, I'd love to see the Klaus interview. BitBoy is horrible. He is absolute piece of trash. And for Jimbo Tango, here we go, my good man. I've got news for you across the pond. Oh, guys, and remember, as always, any article you see in this video will be linked in the description below. Binance sets up its 7th unit in Ireland. Crypto exchange operator Binance sets up its 7th unit in Ireland as it continues to expand its roots in Europe. Last year, Binance considered Ireland as part of its plans to establish a number of headquarters worldwide to break with its decentralized structure and improve relations with regulators. Interesting. So now we have Binance into Ireland. Jimbo Tango says Stellar didn't win. Yeah, I didn't hear. I didn't even get to see who won or anything like that. Jimbo, if you've got an article that you don't mind sharing, I would love to see that, because that would be a very cool article to see, who they picked, maybe why they picked them, stuff like that. Another one, Chris chimes in, says, will we see a quick drop right before the announcement? Well, Chris, that is why I've got the heat map up right now. Heat map right now is set to 1 hour. This is telling me what the market is doing right now. I've also got individual charts here loaded up, ready to go. Look at XRP leading up into this. Look, everyone, I see it right here. Check it out. Look, there's volume. There's volume action right now with leading up with XRP with the Feds. That is, I like to see this. That means there is some optimism in the marketplace leading into it. Looking at Bitcoin, we could see the same thing. Not as much volume proportionally, because check it out, right? There was a bigger pop, a more noticeable pop in XRP. We go to the XLM side of things. XLM is getting some movement here as well. Again, not the volume as the likes of XRP proportionately. We know, everyone out there, we know that XRP has been banging lately. All right. They've had a lot of positive stuff come out in the court case recently. A lot of people are feeling good about XRP. What about ADA, you ask? Look at ADA is on the way up, leading into Jerome Powell and the Fed raising their rates. So right now, overall in the market, they are positive leading up to Jerome Powell and the Fed. That's telling us that they expect 75 basis points, but it also tells us they expect the Fed to back off a little bit. Now, remember, the next meeting is in December. It's not that far away. If they were to drop yet another 75 in December, that would be a huge Merry Christmas FU to all of the U.S. citizens out there. That would piss me off. That would piss me off. What I would love to see, I would love to see the Fed, all right, and I know this is kind of stupid. I would love to see the Fed back it down, just drop a 25 basis point hit in December, give the market some breathing room, right? Let December just not be completely bloody, because here's the problem. In January, budgets for corporations start over. Right now, budgets are dead, all right? There's not going to be much cash flowing into the market on that big money level in December. People are going to be seeing what happens with the election shakeout, right, everyone? We're going to see how the politics line up on that. So there's going to be a lot of stuff going on. Oh, Chris has got to go. And Chris says a low raise of basis points due to the midterms. The thing is this. I think 75 is given, right? I think 75 is given. And again, we're going to be, the announcement will come whenever you guys hear it, let me know. I've got my phone going. I've got my other PC going right here. Whenever we get the announcement on the Fed rate hike, we're going to see the market react. I don't see them, though, being nice to the market right now. I see them looking, honestly, at 75. I do. I see them looking at 75. As of right now, I don't want to say anything about December, because December you need to see what the CPI data looks like. And guys, we only have to wait a week. You do realize the next CPI data, which rocks the market secondly only to, in what Jerome Powell does with the Fed rate hikes, CPI data is coming up, guys, in a week from now. And honestly, inflation's been a mess. It's been an absolute frickin' mess here with inflation. So looking at stuff right now, you could definitely see we're seeing some pops with XRP going on. We're seeing some volume popping here a little bit. Bitcoin, we're seeing pops, but not the volume. And XLM, we're seeing some pops, some volume here, but nothing as of the late point. Let's see. Meparatus says, and what's up, Meparatus? How are you going? Says, don't forget that XLM is down 80% versus XRP. Yes, when you compare the two, and let's do that, everyone. Let's go here. Let's go this one. We're going to make one more chart here just because, why not just make a bigger mess? Let's just compare XRP just to XLM just to see the comparison for everyone right now. Give me a second here. XLM. All right, so we're going to put XLM in blue on this one and XRP in red. We're going to zoom it out here. All right, so you could see it since the summary judgment FUD that was out there. And remember, everyone, they were like, oh, there's summary judgment. Okay, you notice how nothing's really happened? Since the summary judgment FUD out there, you can see XRP is just taken off, and also since the last rate hike, right? Interesting. Michael Lopez, though, has a really good point. And Michael, I'm glad you brought that up. Michael says, XLM hasn't done much price-wise lately, but a lot is going on behind the scenes. And Michael, I'm with you like 100%, man. I'm totally with you 100%. For what you guys, let's do this. We got a little bit of time. We'll get into this. I could do this really quick for you guys. I've got all this shit pretty much memorized. We'll get into this. I could do this really quick for you guys. I've got all this shit pretty much memorized. I can bang this out. All right, here's what Michael's talking about. Look at this, all right? Ledger performance. So these are all of the transactions happening on the chain, all right? Look at this. September, October time period, right? 2 months, 775 million transactions. The next closest time we got was 596. About 180 million transaction more than their biggest time ever before. Now, to learn what's causing these things, you want to go to weekly trade volume. When you narrow down to weekly trade volume, you can see, boom, USDC is up at the top. That is something right now that is fueling movements and activities on the chain. USDC. So why is that important? Because remember, AUDD just launched on Stellar Chain. Yes, everyone, the stable coin AUDD launched, okay? Interestingly about that, and again, I don't have it on here, not just offhand, but when AUDD launched, remember, that is on the Stellar chain as well. These stable coins are a feather in the cap for Stellar, which allow a lot of these partnerships. The reason why MoneyGram wanted to hook up with Stellar was not because Stellar's, you know what I'm saying? No, it's because Stellar had that USDC action going on. So USDC is really opening doors to a lot of stuff out there. And there was a story out there. I did it a few days ago. It was something like XRP holders gain 40-something thousand addresses, something like that, right? Like the number of accounts, like they're over 1 million accounts, something like that. XLM right now for accounts, right? Now this is going to be outside of Binance, outside of Coinbase, outside of Webull, because they have their own wallet that's traded within. There are 7.2 million asset holders of Stellar right now. 7.2 million. So keep that in mind. Stellar chain has got massive amounts of volume transactions happening and payments too. Payments, 1.7 million payments in the last 24 hours. That's some movement, right? That is definitely some movement. And you know, you got to be honest with everyone here. XRP does not have the volume of payments. They also don't have the number of asset holders, but what XRP does have is ODL. And ODL is some juicy action because that causes instantaneous demand for that instantaneous need for liquidity. ODL is big. If Stellar could come up with an ODL version themselves, not tied through USDC, but moving money via Stellar's XLM, whoa, would we have something nasty going on, ladies and gents. I would be very, very excited to see that. All right, so we are about 10 minutes away until the rate hike gets announced. As soon as it gets announced, you guys hit it up on the screen because I'm going to try to pay attention to you. Well, I've got it on here, and I'm also going to look on here too. Let me get a quick drink. No, this is not alcohol, everyone. This is my post-workout with my branch chain amino acids and other micronutrients in it. So everyone have a drink real quick. Let me give my throat a little rest. Watermelon flavor. Yummy. All right. So right now we are looking at last hour. Markets are still green, everyone. In the last hour, XRP has gained almost 0.7%. BNB up 1.25%, Doge up 1%, XLM up 0.1%. So XLM right now lagging. Mempreda says, for me, I think XLM is more in the background than XRP, except for the partnerships. Just look at Lightman. It was there a month already, unlike XRP. You know, and Mempreda, I'm with you on that. XLM, Stellar, they have a lot of good partnerships. They just don't have that sexy vibe. And I had a conversation earlier with someone. I was talking to Virtual, and I was just like, we were talking about it, and it kind of has me feeling the same vibe. What's more important, everyone? Is it performance or is it sexiness of a token? And be real here. And before you jump in and you're like, oh, it's all performance, can you really say that when Doge has a higher market cap than XLM? A coin that's utility is whatever is even better? I mean, that's just something to throw it out there, all right? So, I mean, what matters? I mean, does sexiness matter? I mean, XRP has the court case. I know. I get it. Court cases are bad. But you're always hearing about XRP in the news. You're always hearing about Ripple Labs in the news. You're always hearing about them with SEC stuff. It's just how it is. They don't have that with Stellar. Even when they announced like all their MoneyGram stuff, even when they announced their WireX partnership, people were just like, Even when they announced their Novati AUDD stablecoin, people were like, I don't know. It's like, I don't know. So it's very interesting. We have to kind of start thinking about, does meme help? Look at what happened with Doge with Elon, right? I mean, all the Doge stuff pops because of him. Not that that's what I'm saying is right or wrong. I'm just saying you have to understand the power of some of these people out there, the power of meme, right? The power of FOMO, the power of the emotions that gets tied into this. Steve Fevre says, protein shakes make me windy. No, this is a post-workout with branch chain amino acids. This is not my protein drink. This is my post-workout recovery drink because I've trained already twice today. I've got one more training session to go, maybe two if I have the energy, but we'll see what happens. Enrique Ramirez, what's up, Enrique? Glad you could make it. Enrique Ramirez says, Doge for Mao, followed by XRP, XLM, SHIB, and Luna Classic. Michael Lopez says, long-term utility should prevail over hype, etc. But is that true? Think about this. Like, I understand. All right? I understand it. All right, let me get another quick drink. I get it. I get what people are talking about, you know, with Doge and all this, right? I trust me, I understand all that. The problem is, though, is the majority of people out there wanting just a quick lotto ticket big hit? If that's all people want, then you know what they're going to do. They're going to keep putting their money in Doge. They're going to keep putting it in SHIB. They're going to keep putting it in things that they try to just make the pumps out of. All right? You have investing and you have lotto ticket. And right now, a lot of crypto goes off that lotto ticket theory. They don't give a shit that it's risky. Okay. You guys ready? I'm going to blow your freaking minds. Yesterday, I did a story about 97.7% of things on BNB being rug pulls and fake, okay? It's a lotto ticket. 97.7. Stellar just did their fourth quarter review, everyone. Their third quarter review. My bad, everyone. They did their third quarter. Now, assets. All right? Their assets. Of all the tens of thousands of assets on the chain. All right? Assets on the chain. Hear me out, everyone. I'm saying it. Assets on the chain. Of all those assets, only 79 of them are real. 79 are real. So of the tens of thousands of assets on the chain, and you could go into this and you could explore all of these Stellar assets. All right? And you could just keep going page after page after page after page after page. All right? Most of them are not good. They're not real. They have nothing. Nothing at all. Look at it. When I go to weekly volume, look at all of them that are labeled scams, and we know we're just getting through them. This is a scam right here, and it's not labeled yet. XLM.org, that's a scam. I can tell you that 120% is a scam. I just researched it like a few days ago. Look at all these. Look at all of them is in here. Scam. Look at this. And these are all, everyone. I sorted this by weekly trade volume as the highest. Look at all of these are scams. So right now, yes, crypto is a lotto ticket. So if crypto is a lotto ticket, a get-rich scheme, I think we have to very much keep in mind the idea of Doge, SHIB, and all of those. The money, the hype, the sexiness, maybe is stronger than utility. Now, don't get me wrong, seriously. I really believe in utility for the win. But is the general public out there not sharp enough to understand utility in the long run? And does the general public out there just want the lotto ticket to hit it big? Meparatus says, was there a list of the 79 assets? No, I did not see that. Let me, hold on, I gotta see, where did I, hold on. I was looking at this the other day. Give me a second. I'm trying to think, where did I see this? I think I remembered where I saw it. Give me a second. I'll show you guys what I'm talking about here real quick. Give me a second. So it was in their quarter three. Hold on a second. It was quarter three. Where is it? So yeah. So it was in this blog right here. And then you go to their quarter three report. Give me a second here. Yep. Here's the PDF. I already got it loaded. I'm already scrolled down. Give me a second here. I'm gonna find that one for you. See, now you guys are getting into my realm. This is the stuff that I love. All right. So we're gonna go through the executive summary. We're gonna go and we're gonna look at legit assets. Give me a second here. Network stats. It's coming up. Relevant assets. Here we go. When SDF measured the number of relative assets in quarter three, there was 89. 1 year later, there are now 79. So even of the 89 that they had, they've taken now 10 away from their actual legit assets list. So Stellar has now lost 10 actual legit assets since then. There is not a list of who they provide. All right. But these are the number of relevant assets. All right. And basically what they're saying is that they've strengthened the criteria for reporting for relative assets. Basically is what they're saying is, yeah, it didn't fit the bill. It wasn't like real or relevant or worth it. Let's put it that way. That's a nice polite way to put it. Think about that. 79 guys. So 79. So out of all of these, only 79 are considered relevant. And look, as I scroll down, like, come on. Like, look at all this. Look at all of them here. And most of these here, people haven't even, like, reported them yet. They haven't even freaking reported them. All right, so we're going to have the, oh, here we go. That's it. The market is starting to react. We are starting to see Bitcoin pull down right now. We are starting to see XRP pull down. It looks like right now the market is definitely starting to retrace. Just a couple minutes. Thanks, Party Farm. Party Farm just chimed in. I asked Justin Rice for a list last quarterly review. They don't have a public list to give anyone, which is lame. It's horrible. That's the one problem I have with Stellar. They hide behind a lot of their crap. They really do. I honestly believe that they know how many people are scamming their thing. You know? I mean, that's totally the problem. So anyways, here we go. We're looking at it right now. We are definitely seeing a pullback in XRP as of late. The market is definitely starting to respond. If we look at Bitcoin, Bitcoin now has had a massive pull on the way down, everyone. It looks like the market is reacting early messy. It looks like we have XLM now on the way down. Cardano right now is on the way down as well. It looks like the markets are definitely starting to price in some action with Jerome Powell. Chris is saying, hey, a little shakeout will range between plus or minus 5%. XRP right now from that time period, that's I mean, it's not crazy, but I mean, you can see it. The market is starting to move. We've got 142 people watching right now. Make sure you hit the like button, subscribe if you haven't. Seriously, thank you everyone for watching this. The poll right now says we've got 75, or there's 62% of you out there that says 75 basis point is going to be the hit right now. It looks like the market is definitely starting to price stuff in. Massey says bear markets suck. Bear markets are horrible, but that's when you plant the seeds for growth. If you can weather a bear market, you stand to make the good juice. Chris B says nothing announced yet. Yep, I am waiting for it right now, Chris. I'm waiting to see. Give me a second. I'm just going to go up on my phone here. I just want to keep the price of one of these up on. I'm just checking it right now. Bo Rabbit joining us as well. Thank you much, Bo. And Bo, thank you for the comments, by the way. I try to get back to you as many times as I see them. So thank you guys for the support. Let's see if we can find out the Fed announcement. Give me a second. I'm doing this on my phone. I've got my laptop here with the comments. Here we go. Fed rate hike. Give me a second, everyone. Dun, 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 dun. Dun, 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 dun. All right, has anyone seen it yet, what they got on the Fed? I'm looking right now. I have not seen what the actual hit is. And Massey, what's up? And Pages, when others panic, yes, buy up, spike up. All right, we are waiting right now. And if anyone gets that information on what the Fed did, please let me know what you see. Yeah, look at this. We're starting to see the volatility happen. Things want to go. XLM right now, let's take a look here. And we're going to switch these out from lines because it is easy to look at lines. And we're going to swap them out with the candle. We're going to swap that out to Jimbo Tango's got us covered with 75 basis point hit. I've got XLM right now up on the screen. Bitcoin is doing some downward dive right now. Let's see, we've got XRP right. Ooh, XRP pulling back a little bit. I'm going to switch the XRP here to the candlestick. Don't you worry, everyone. Let's swap this out. Let's make our interval a little bit different here. XRP, big red candlestick there at the end. XLM, big red candlesticks here, but with the little bit of a stoppage right there. We've got a 75 basis point hit coming in right now from Jerome Powell and the Fed. Let's take a little bit right here. Right now, the market is looking mostly green over the last hour, all right? Mostly green. We've got someone chiming in that says algo is running. Oh, let's take a look at that one. Bitcoin said, F it, I will go running. All right, let's do this. Give me a second here. Let's pop up algo for everyone because I think that's another good one. Algorand, where you at, my good man? All right, so Algorand, let's go to the 1 day right here. Yeah, I don't know if Algo's ripping, you know. I don't know about that one. All right, let's see. What do we got right now going on in the market? We've got Bitcoin right now with the announcement of 75. Markets are kind of, you know, Chris says Yahoo lags behind. I'll keep refreshing this with Algo on Yahoo. My Yahoo is usually really, really tight with what happened. I mean, like really, really tight. I could do it on here too. Give me a second here. But anyways, right now we're looking at Bitcoin sitting at 20,673, ETH 1575. The markets don't seem to be propping one way or other too much right now. Let's just go on here. Let's go Algo just for fun. All right, let's just see what the Algo thing says. See Algo right now. Let's go to the 1 day on here. Yeah, I see it. I see what you're talking about right here. I see that. Let me just go right here. Yep, you can see it right here. From 34.96, 35. So, I mean, it's not totally crazy, but, you know. Yes, 0.75 has been confirmed, everyone. The thing that we have next is Jerome Powell and the Fed will come out. Not and the Fed, but Jerome Powell of the Fed will come out at 2:30. He will tell us what went into his decision and what they're looking at doing next. What's important to see here, everyone, is his tone, his body language, and remember, everyone, we have this. We have CPI data will be coming out in 1 week. It is coming out on the 10th, everyone. The next CPI data, yes, will be happening on the 10th. And then remember, Jerome Powell and the Fed will come out yet again in December for yet another rate hike meeting. And here we go. Like I said, 8:30 a.m. November 10th is when that CPI data comes out. Right now, we are looking at, and let me get back to the old heat map right here. Right now, we are looking at market cap wise. Bitcoin right now dominating. Let's move out of market cap. Now let's look at volume. Right now, check it out, everyone. Over the last hour, lots of volume with Doge, lots of ETH and Bitcoin volume. Interesting, everyone. Look at this XRP, not too bad in volume right here, but Bitcoin, Ethereum, and Doge, big ones out there. Wow, interesting to see. Massey's chiming in, saying $3 by the end of the year. I don't know. That's the only way you could get to $3 by the end of the year is if the SEC settles and just pulls out. That's all we got. War Gallery says, what's up? Hey, just got back from my daughter's point. I had to go listen in. Well, thank you, War Gallery, for chiming in. We have a 75 basis point hit confirmed. Patriots Just One says, will you make crypto and beer live again? Yes, I will. I've got to be honest with everyone. I have been training super hard. I mean, like freakishly hard. I'm going to be doing chimney tops here soon, and I'm going to be doing some off trail and free climbing. So I want to make sure that I'm in like the best freaking state of health in the world. So that's why I'm not drinking right now. But don't worry, Patriots, we will definitely do drinking in crypto, you know, beer in crypto. We will definitely be doing that. I just got to get a few more weeks of hard training in. Hence, I'm drinking branch chain amino acids rather than naughty alcohol acids. All right, Chris says, I am scared. Pre-Powell is green means post-Powell big red candles. That's kind of what I'm watching. I'm wondering too, everyone, is what are we going to start seeing with Jerome Powell and the Fed? I mean, what's going to happen with the markets? You've got, look at this, XRP making the pop back up. So it looks like they popped down and then definitely popped on the way back up. There were some bottoms that were forming here. And let's do this. Let's switch this out. Let's just give me a quick line just so I can see it. Yep, that's easy visualization for you guys to see right there. We've got Chris chiming in that says algo is moving very fast. And remember, at 2:30, I will switch it on over to Jerome Powell from the Fed, rocking it to us live. Nico says, sports first, then party. Yes, I have to. I have to take my training first because I do very dumb, extreme, very risky things like when I do my hikes and climbing. So I have to be very careful, and I have to be in like the best freaking shape in the world. So that's why I'm not drinking as much right now. I'm drinking my branch chain amino acids. Would be nice if I had a sponsor. My gosh. Enrique Ramirez says Doge is up. Let's take a quick look here. Look at this. In the last hour, the markets are definitely starting to rotate, everyone. Doge, 3.47% in the last hour. Ethereum, 178. Now look at this. Look at how much over this last hour that XRP is not holding market cap, or not market cap, volume-wise. Look at that. In this little box right here, you guys ready to see what XLM's volume looks like compared to the rest of the group? Here we go. XLM, watch what happens. This is volume-wise, okay? This is how small the volume of XLM is compared to the bigger market. Now watch what happens when I keep zooming out. There's XLM right there. I'm going to keep zooming out. Keep going. I'm going to keep going. It's right there. That's XLM, everyone. That is crazy. And Chris chimes in, hey, Klaus, greetings from Germany. Whereabouts, Chris? Where in Germany? Upper Franconia by chance? Bayreuth, Bavaria, Munich, some Süddeutschland, yes. DVR says, what, Stellar and Ripple, not paying you? No, Stellar and Ripple do not pay me. Everything that you guys have seen from the channel, this all comes from ad revenue. Ad revenue and honestly the donations and support from you guys, fans like Jimbo Tango, War Gallery, Twitch, the channel members out there. That's honestly, I have not done a single endorsement. I have not gotten paid from Ripple Labs, Stellar, no one out there. I have done all of this on my own because I really love doing it. Chris says from the Berlin area. Oh, interesting. Now, I got to be honest with you. The only time that I have dealt with Berlin, I go to southern Germany all the time. The only time I've dealt with Berlin is I had to make a flight. And so I had to take the Autobahn from Munich up to Berlin. And I was rocking it in a BMW station wagon on sport mode in the rain the whole way on my way to Berlin. I didn't even get to party in Berlin. I got to sneak like a few beers in the airport before I boarded my flight, but I didn't get to have fun. So I did not have fun Let's see. Massey says hi from Byron Bay, Australia. Nice. Nico says, Klaus, if time permits, fire up trading view and apply the Bollinger Bands to XLM the weekly time frame. Look at the squeeze. I'm going to have to do that. Let me take a note here. Give me a second. Damn it, where the... Hold on, sorry. I'm just taking that note real quick because you guys know how I do this stuff. All right, hold on. XLM. Sorry, just making a quick note here. And remember, we've got Jerome Powell and the Fed set to come on live at 2:30 a.m. I would highly encourage you out there, subscribe to the Fed, all right? Subscribe to the Fed. Catch this stuff here. I'm going to mute this. I got 2 different feeds right now going on from the Fed. I will let you know which one is better. Ignacio. Hopefully I said that right. Ignacio says hello from Spain. What's up, Spain? Spanish friends. Patriotist chimes in. XRP was 33 cents when I got in, but I have bought more at these prices. Yeah, these prices have been very juicy. And quick, before we get into Jerome Powell's speech live, let me know in the chat, where are you listening or watching from, everyone? Again, we're going to go on to the heat maps. The market is definitely starting to move. Bitcoin right now breaking 20,700. Ethereum has had trouble, everyone, with 16. We're approaching 16 soon. We're sitting right now at 1597. XRP sitting at 46.4 cents. XLM sitting here at just over 11 cents. No massive movements of the market just yet, but we are definitely seeing, hey, the Fed announced 75. The market expected it. The market priced it in. This is exactly what we talked about at the beginning of the show, everyone. This is to the T what we talked about. It's following our plan, exactly what we thought. They would come in, they would announce 75. The market already had it priced in. We would move positive on that. And then what we're going to do is we're going to hold our breaths and we're going to wait to see what Jerome Powell, if Jerome Powell comes out and says that I am going to be dropping some nasty, move on down. And I have a feeling you could hear that from Jerome Powell today. I have a feeling he could reiterate the fact that he's looking at going, hey, we need to get this rate down to 2%. And for those of you out there, like, what are you talking about? Dude, you guys see these blue bars on here? You see how these blue bars are 9.1, 8.5, 8.3, 8.2? All right, that's the inflation rate for the United States. The Fed is going to keep raising up rates until these blue bars get to 2.0. So don't think we are out of the woods yet. Bo's chiming in from Panama City Beach, Florida. Thank you, Bo, for letting us know where you're from. Toby says, hi, Klaus. Been watching a few months now. Great streams, superb short clips. Keep up the great work. UK, Pork Pie Land, XLM, XRP, Algo, H-Bar, and Shib. Well, thank you, Toby. Another fan from across the pond. We've got tons of fans from across the pond. And honestly, some of the biggest supporters of the channel have been from across the pond. Party Farm says, the Fed needs to force banks to increase their reserves. Interesting. So if they increase their reserves, you guys know what would happen there, right? Then the demand side from the banking end would get squashed as well. What Party Farm is insinuating is this. Hey, banks, if we're going to take some pain, then you got to put some pain on your balance books. You have to hold more cash on your balance books, which means you can't invest as much, which means your projections of growth would be less. Party Farm, I get exactly what you are saying. Chris chimes in. Powell will do everything to keep voters happy this week. Expect no polarizing wording. You think Powell's going to play it soft? You think he's going to pitter-patter around this one and kind of just come in a little bit weaker than normal? Mark chiming in saying the UK London fans. What's up, my London fans? I love fans from across the pond. Seriously, what's with all the fans from across the pond with the support? What, we got no one in the States except for Bo Rabbit hanging out in Panama City Beach, Florida? Right now, guys, we're still waiting. I am waiting to see Ethereum bust through 60. Ethereum's struggling, everyone. They are struggling with that 1600 right now. Bitcoin right now is struggling. They haven't been able to hold that 21. Just plain, let's just be plain and simple right now. I've not been able to hold that 20, man. Nico says, yeah, he will be dovish. You guys think his body language will be able to hide it? You guys think he's going to be shaking this time like he was last time? Last time he was out there, he was all just like, he was twitching. Dude needed a ladder. Seriously, he needed to bump the Zans and ladders. This dude was like crazy last time. Shoko says, hi from Sweden. Steve, Great Britain. Hello, Steve. Ken, Myrtle Beach. Countries buying tons of gold. Does US even have enough money to buy any? Really would like to know what all these gold purchases mean. And yet the funky thing is guess what? Gold isn't even moving, everyone. That's the worst part about it. That is totally the worst part about it. Eric says, I'm on Long Island. What's up, Eric? Long Island, little New York fan out there. Let's see. Chris says, time to adjust your video release schedule to European time zones. Yeah, I think that's what I actually have to do. Like, I've got so many European fans chiming in now. I'm gonna have to change my sleep schedule even. Forget the release schedule. We're gonna go sleep schedule, and we're gonna go on European time. We are waiting for Jerome Powell and the Fed to come out at 2:30 p.m. Eastern time, everyone, because he is going to be telling us what went into his decision on this, or not his decision, the Fed's decision at 75, and what they are looking at going forward. I expect him to say this. I expect him to say that they are going to take an aggressive stance to get it back down to 2.0. I have a feeling that you're going to hear that much, much more. Jose says, hey, Klaus, this is a crypto follower from Arizona. So Jose Astorga, thank you very much for chiming in. Robert Melvin, Toronto, Ontario, Canada. No snow yet. Oh, Toronto, just like my good man, Will Tennyson. Does anyone know Will Tennyson? Tenny 10? Yeah, there we go. He's a Toronto guy right there. Omar chimes in from St. Petersburg, Florida. So we've got Toronto up here, St. Petersburg here. One with snow, not yet, and one with sun. Also, War Gallery, hard to have much snow yet, Robert, with this warm weather. It has been warm. Shirag Bhat says, hi, I'm from India. Our Nifty will rock it. Oh, hello. Long Beach chiming in. Holy crap, you guys. Tempe, Arizona. Kurt is chiming in from Deutschland. Michael from Tucson. I am from the upstate of South Carolina, everyone. Not too far from, what was that thing that they blew up? The Guidestones, not too far from the Georgia Guidestones. All right, so looking at the market right now, see, okay, look, you got Bitcoin over, all right? Bitcoin over right now, that 20,700 mark. Ethereum, look at this. We're watching this whole time. Ethereum they're struggling to hit that 16. Let's see if they break it here soon. I'm very, very interested in that. Let's see. Cool Kitty says, Halifax, Nova Scotia, no snow. Who decided to talk about snow? I'm in South Carolina. No snow. I don't want any of that. Bristol, UK, another UK fan here. Chris B from Calgary, home of the Calgary Flames. Yes, ooh, Calgary Flames, everyone. Party Farm, we got a lot of people in here, all from Tempe. Kadome from Vegas, Las Vegas. Ooh, like that one. William says, I'm afraid this inflation thing will continue for a while. There is nothing we can unfortunately do than to sit. Great channel, Klaus. Keep it up from Portugal. Well, thank you, Willem. Yeah, and you know, when it comes to inflation, all right, let's zoom out, all right? Let's be fair. Let's zoom out, okay? I don't want to freak out in it. And Andy says Switzerland is in the house. I have been to Zurich, just throwing it out there. I've hung out in Zurich before. Interesting place. A lot of money in Zurich. Oh, and real quick, if you ever go to Zurich, like, and you go to the airport there, do not try to hit on the women in uniform carrying guns. They're there to have a job, not to get hit on by drunk U.S. people getting off a plane. Just hitting it out there. All right, so what you guys are talking about, yeah, Chris said go Flames. I got your back, buddy. But what we're talking about is this, right? You see this right here? You see how we're leveled right up here, okay? So when you look at this 2022 bar right here, we're leveled right here. And you know what? Let's do a snip. We'll snip it and we'll draw, all right, guys? Let's snip and draw. I like to draw for you guys. All right, so we're going to look at that. What we're looking at this. See how this is really leveled right here? What we really want is, as fast as this went up, we want it to come down just as fast. That's the hit that we were looking for, all right? What we're seeing, though, okay, is that maybe, and this is what we don't want. Trust me, this is the worst case scenario. We don't want this. We don't want sideways action. That is the last freaking thing that we want, everyone. We do not want that sideways. We want that to come back down as fast as it went up. And remember, Jerome Powell and the Fed will be coming on here in 12 minutes, letting us know what is going to be going on with the action. And Andy says, I knew there was a connection. Just throwing it out there. Don't hit on the pretty ladies with guns in airports in Zurich. Let's see. Mark says, hi, Klaus. Holding till Xmas if needed. Rock on, man. Rock on. Thank you too, Mark. For me, I'm still doing what my exact plan is. I've still got a couple more years where I'm holding. And for me, it has to do with life usage, life decisions, life changes, stuff like that. All right, so we've got the heat map back up, guys. I don't know how many times we can look at this. Check it out. This is crazy. Ethereum is really struggling right now to break through that 16. There is a definite resistance at ETH at 16. Something we're going to have to watch when Jerome Powell comes out and says, will ETH break or fall? I mean, they can't make it now. The rest of the market's moving up, but ETH is struggling at 16. Mark says, Willem says, can we compare inflation in the last few years? DMG Walker says, Lou in mighty Michigan, it's a good day, it's a great day. What's up, Michigan fans? Kalamazoo, I've been there a few times to Kalamazoo. And also where the Kellogg cereal place is, Battle Creek, Michigan, to see a corn concert. So I've hung out in Michigan a little bit. All right, so here's a comparison, all right? We've got the 5-year chart for inflation, all right? These are the rates. Check it out. For like the majority of these 5 years, from 2018 to 2021, we were hovering right around that Fed's 2% rate. That was the action that we were looking at, all right? Then you could see once we started crazy money printing, you know, Rona, blah, 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 you can see that, boom, that inflation rate went way on up. The Fed, trust me, the Fed does not, I'm not speaking for the Fed. The Fed does not want this. We don't want this either. What the Fed wants to see ideally is that their rate hikes take this line right here and make this line just go just like this. That's what the Fed wants. Actually, that's what all of us want. The problem is, though, is what we're seeing right now is we're seeing that the inflation rate, especially if we zoom out, let's do that. Let's zoom out. Let's go back to that year just so I can show you guys. What we're seeing right now, and this is where everyone is starting to get scared, all right? What we're starting to be nervous about is, are we going to see this leveling here? Are we going to hover right around this 7.5%, 8%? If that's the case, then we are in deep, deep, deep crap. Deep, deep crap, man. Just throwing it out there for you guys. That is something that has everyone out there worried. If the Fed raising rates does not take inflation down, we're in for some world of hurt. I mean, we're talking lows like you've never seen before. So the last thing we want to see is this darn inflation rate not falling back down. Now, this last CPI data, you see it up on the screen here, right? See September, and I'll go to the interactive screen. You see September right here? That was the data we got for September. October's data, all right? And I've got it somewhere up on this messy of screens. Give me a second here. October's data, give me a second. October's data, hold on, everyone, I had it. October's data comes out November 10th at 8:30 a.m. 8:30 a.m. on the 10th. So in 1 week, we're going to get the next chunk of data. I'm telling you right now, what we really want to see on this next one is under 8%. We want to see 7, 8, 7, 9. We want inflation to go back as if it was February of 2022. That is the minimum we're looking for on November 10th, is that to come out at 7, 8, 7, 9. We don't want yet another, because think about this. Let's say the next rate, the rate hike comes out, right? And this data comes out here, and we're back at 8.2. You know what the Fed is going to say then? They're going to say we've dropped a 75, 75, 75, 75, and it's not stopping it. That means the Fed then is going to drop even more and more and more. And we've got Ben. Yeah, see, guys, I told you guys from across the pond. Ben chiming in, supporting the channel. Thank you, Ben. Ben says, hey, Klaus, hope you're good. Hello, everyone. Ben, I am doing great. I don't want to upset you, though, Ben. Just don't want to upset you. I'm drinking branch chain amino acids because I've got a really big climbing hiking trip that I'm doing here in the near future, and I'm training super, super hard for. I'm training sometimes 3, 4, 5 times a day. So right now, there is no beer in this. I'm super sorry, Ben. There is just branch chain amino acids in here. And Ben knows who to say hi to. Look at it. Everyone says hi when Ben chimes in the room. I told you guys, we've got an amazing community on this channel. But serious fear factor is if on November 10th, and don't worry, guys, we're going to live stream November 10th. We're doing this. November 10th, you bet your ass, we're going to be live streaming at 8:30 in the morning because we want to see if the CPI data comes back down. Damn it, if the CPI data stays up above 8, If we hit another 8182 and we're just barely kind of creeping down like this, we're going to be in deep crap, because that almost forces Jerome Powell and the Fed to come back in December and drop yet another 75 basis point hit. And that's how this works. That's what Jerome Powell and the Fed are doing. He's using this data that you see on the screen saying, hey, we've raised it 75, it's had this effect. 75, this effect, 75, this effect, and that's what he's doing. But if he sees that he's dropped 75, 75, 75, 75, 75, and yet inflation's not going down and it's leveling off, what do you think he's going to do? He's going to reach deep down in his pants and he's going to do this. He's going to take it and he's going to pull out the big snake and slap the big meat on the table. And then that's when the market gets scared. The market is going to get scared if we do not see inflation data start jumping down. If it doesn't jump down, that means Jerome Powell and the Fed, they have to drop out bigger meat to mess the market up on the demand side of things. And see, look at it. Look at the comments going right now. We've got channel members interacting with each other, channel viewers, subscribers, friends of the program, everyone out there knowing each other, saying hello. See, that's why I love this. We have like the best crypto community out there. You guys all look out for each other. You all say hi to each other. I love this kind of stuff. You guys wonder why I love doing this, why I do this 7 days a week. It's because this is so much freaking fun. Like, this is the coolest shit in the world. Like, how can you guys not like this? We have 5 minutes until Jerome Powell and the Fed go on. What I'm going to do real quick, all right? I'm just going to do an input sound check, all right? What I want you guys to do is let me know if the input sound is okay, if it needs to go up or if it needs to go down. I'm going to mute my mic and we're just going to do a quick input sound check before Jerome Powell and the Fed come on. All right, and as long as you guys say that that feed was all right, that is awesome. Cool. Thanks, guys, for letting me know on how the sound feed was. Now, I do have some amplification I could throw in here real quick with Jerome Powell. Sometimes he talks really quiet on these things. If it is quiet, all right, if it is quiet, just let me know and I'll turn up the sound. And Ben, I do sincerely appreciate it, sir. DMG Walker says, perfecto, I guess we are doing good. Chris B says, if raising rates will not bring down inflation, will this hurt stock markets more than crypto? It's going to destroy them both. Seriously, crypto takes the biggest hit in the beginning because it's the riskiest, right? But once people have pulled their money out of crypto, then what happens? Then they start going to the stock market. Then if the stock market starts falling, what do they start doing? They start selling other assets and they start working their way up on the chain. Crypto's already taken the beating, guys. Crypto has taken the beating. What we need to do right now, we need to keep a damn close eye on this inflation number. We all have to hope that when they come out with their next inflation, the CPI data, we have to hope that we are at 7.9 or less. We do not want to see an 8.0 number anywhere on this next report. And we should have Jerome Powell and the Fed at any time now coming up on the screen. They are about 2 minutes away. And again, as Jerome Powell comes on, just let me know if you guys need me to turn up the sound for him a little bit. Adobo chiming in saying, I'm late, Klaus. No worry, because guess what, everyone? As soon as this live stream is over, what can you do? You could go in the live stream folder and find it and re-watch some of it. Because what's really cool is you can see exactly how the market is reacting. Ooh, Ethereum finally broke 1,600. Bitcoin right now at 27. So leading up to Jerome Powell and the Fed, we can see that the market is definitely looking bullish. They're looking at Jerome Powell and the Fed being nice to everyone. Bitcoin's got some interesting movement here, to say the least. XLM, let's change this over to lines just so I could read it real quick here. XLM, yeah, it is going up by 75 basis points to Stellar One chimes in. Yep, 75 basis points, been confirmed by multiple outlets. XLM is getting a nice move on this. Chris B says, I would think that if the fiat system gets pounded, crypto will naturally rise. But remember, everyone, you can't get to crypto without fiat, right? You have to take your cash, turn it into crypto. So if there's the stock market, right, which is tied into a lot of cash and all that, if that gets hurt, your cash supply is gone. Then that's not going to be extra money. It's not like extra money then goes into crypto. No. How crypto works, remember, it's the most riskiest asset class. So people out there, in a broad stroke, that is the last thing they invest in. So they've already pulled their money out of crypto. Then they'll just kind of pull. They won't go back into crypto until things become less risky. That's the big problem, everyone. You will not see big flows of money into crypto until things become less. Okay, here we go. We've got Jerome Powell in the Fed. All right, when he starts talking, everyone, let me know what you think of the volume, and I'll make sure that I change it for you guys. I'm gonna also kill my camera feed. I'm still here. Don't worry, guys. I'm still here. I just want to make sure that we catch everything with him. All right. Well, obviously Jerome's not talking, so I could fill in the air just a little bit. I just want to make sure that I don't miss out on anything from him. And again, just let me know once he starts talking what you all think of the sound. So remember, the initial market, right? You can see it right here. Don't worry, I'm gonna listen to Jerome. The initial market, all right, popped before leading up. Look at the volume. You can see it on the bottom of the screen. Popped before the announcement of 75, telling us the market expected 75. Oop, here's Jerome.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance. After briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food, and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country.
I'm sure you guys just heard that. He just said the key factor we were all looking for. He is going to stay the course until it meets the Fed rate. That means more hits like these 75 basis points are going to come. It's going to be a messy one.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Colby. Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy.
So when Jerome Powell was talking about, hey, we're going to use, all the data to do this, this is what he's referring to. He's referring to CPI data in Beige Book. Don't worry, I'll be sure to do videos about both of those in depth as those data comes out, because then that way we could at least have a better idea of what Jerome Powell and the Fed are looking at when it comes to data.
Economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So, what I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate, given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate, and we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time, and we put that into our post-meeting statement, because that really does become the important question we think now, is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find.
You guys, that's exactly why I care about you. That's why I bring the CPI data in. Jerome Powell just said it himself. He's using CPI data. He's using Beige Book. He is using employment reports, everyone. Right now, macros are ruling the roost. This is why we need to see this inflation number come down as fast as we can. The Fed is going to keep jacking up rates, and he just said this. And when he said it, look, Ethereum didn't hold to 1,600. Neither did Bitcoin hold on to 20,600. As soon as Jerome Powell and the Fed said, we're going to get it back down to 2, we're going to stay the course, markets softened up as soon as he said those words. Let's get back to Jerome Powell.
Find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last 2 press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a decision.
Oh shit, did you guys catch that? He just said either this meeting or the next, they may slow it down. That tells me he left 75 basis points open on the table for the December meeting. It's all going to tie in with inflation data and employment data coming out for the rest of this month. He did say it, though. He said December, they're going to leave that door open for 75, but maybe it backs down that January, February, March.
Discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Nick Tamarosa of the Wall Street Journal. Chair Powell, core BCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high fours, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward, a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, people who publish an assessment of underlying inflation.
Thank you.
Gina. Hi, Chair Powell. Thank you for taking our questions. Gina Smilek, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer-term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter-term inflation expectations moved up between the last meeting and this meeting, and we don't think those are as indicative, but they may be important in the wage-setting process. There's a school of thought that believes that, so that's very concerning. I guess the other thing I would say is that the longer we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to the lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions, and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy, whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting a new summary of economic projections which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
Thanks, Chair Powell. Neil Irwin with Axios. As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of labor market, consumer demand. A lot of sectors, you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
Real quick, the thing with Discord servers just came up. I just posted it on the community tab of the page. So if you go to the main channel page and you go to community, where I do all the posts and polls and stuff, you're going to see a link for the Discord server there. The Discord server is actually run by the fans. That's how decentralized we are on this channel, everyone.
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is just very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. So, sorry, was I getting to your question there? Housing, the housing part of it. Yeah, so, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that that's really where a very big effect of our policies is.
And real quick, I just wanted to give everyone a summary of what Jerome Powell said. We're going to get back to him. But what he basically said was this, that families in the United States have a ton of money, is what he's saying. And that because these families have all of this money built up, they're able to withstand higher and higher and higher rate hikes, all right? The problem here, though, is remember, proportionately speaking, the rich have more savings than the poor, which means the poor will run out of money first as he starts choking the economy more and more and more, and then only the rich will survive. So what happens here is Jerome Powell is basically saying there is a lot of savings right now in American families from all the fiat that was printed during the pandemic, the Rona, and he's like, we're going to squeeze all that fiat out of the market. We're going to kill demand, and you're going to watch it hit lower income families way harder than everyone else. You will own nothing and you will like it. Remember, that's the bad Klaus, and I am the good Klaus.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious, to what extent you do and don't draw signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the unemployment labor market. So,
if they come for me and I own nothing, they will then own
the
nothing. Way to go, Chase. I like that one.
50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see, so I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. With the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening. And maybe that's there, but it's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because, and that, the data series is volatile. We never take any one reading. We always look at, 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral.
Yeah, the reason prices are going up was because during the pandemic, businesses had to shut down and they lost a bunch of money in sales. So what do businesses do? They don't cut costs. Well, yeah, they do. They let people go. But what do? They jack up the prices the following couple years to make up for it. Come on, people. This is right in front of us. They do this every so often to reset the market. This is another way of redistributing the wealth, taking all of that fiat money, right? All the stimmy money, all of that money that went to lower income families. They now have to spend it on gas, food, interest rates for banks, credit card loans, all that kind of junk. This is exactly what the government wants to keep people down. So what do? The government doesn't do crap, so the Fed comes in and drops the hammer.
But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis, and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on that. Thank you. The Fed has acknowledged in the past that that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have strong, in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep longer-term inflation expectations anchored, and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell, Janelle Marte with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust, and we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. That's, we now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens, so there's no ability to game market. So it's a really good system. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know, I referred the matter concerning President Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that, so that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power, and you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now, so I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, So we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted, and also you have to look at why things, why the rate curve is doing what it's doing. It can be doing that because it expects cuts or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up, you also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little bit?
Well, what's happened is time has passed and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to, we want to get this exactly right, but if we over-tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates, and I don't know what we'll do when we get there. By the way, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point, but the first thing is to find your way there.
Thanks, Chris.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up the at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did, and now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
You know, we're not targeting any one or two particular things. You know, our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to.
You know, War Galley just said it, and I have to chime in. I follow the housing market very, very closely, everyone. And I can tell you this, rents are not going down. What's happening right now is private equity groups are buying all of these homes that are on the market. Not all of them, but you guys get my point. They're buying the majority of the homes in the market. Now, these private equity groups, as they buy these homes, what's happening is this, all right? They then raise the rents because they own the majority of the homes and they control the rental market. So when Jerome Powell is like, oh yeah, rents are going down. No, rents are not going down at all. In fact, housing prices, yes, I get it, in big metropolitan areas and all that, housing prices are going down. Rural home prices are still through the frickin' roof, everyone. It's crazy. So when he talks about rents coming down, no, I'm sorry. Private equity groups right now have so much money that they've been buying on the cheap, driving up the price of rents in communities. Again, it's a tax on the poor. The only way you can make money in the United States is by owning stuff.
But put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher, and that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, you know, the pattern has been that one after another, they go up, and, you know, that'll end when it ends, but there's no sense that you know, that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So those I control those messages, and that's my job.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
You know, in theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending, even.
Stop it, stop it, stop it. I just heard it again. He just said it. Households have significant savings. Stop. The majority of families out there do not have that. If households had significant savings, then why are the number of people, EBT, food stamps, and all that stuff up? Why are the number of people applying for rental and housing assistance up? If families have so much savings, then why the hell is all of this happening where there's people out there stealing for this, this, and this? I hate when he says that families have no. You're right. Rich families that were able to keep their jobs during the Rona, during the pandemic, they did not have to lose their jobs. They were able to work from home. Rich families were able to build up their savings. Yes, you are completely right, Jerome Powell. But the problem is poor families lost their jobs. They were forced out of their jobs. They were told their jobs were shutting down by the government. And then they collected unemployment. And then a lot of them, their jobs weren't open when they came back in those sectors. The food sector, entertainment sector, it's all a bunch of lies. And what really pisses me off is when he says that American families have a huge amount of savings that they can sit on. That is totally false. The majority of families do not have that significant savings. Now, statistically, when you take the amount of savings and divide it by the total population, yes, it looks like families have a lot of savings. That's just because the top 1% has so much damn savings that if you spread it out to the rest of them, it looks like everyone has those savings. I cannot agree with this crap at all when Jerome Powell says that American families have savings. How do we have savings when I'm spending $4 or $5 a dozen for eggs? My milk is close to $3. Gas is over $3. Rent, housing going through the roof. This is a complete mess. And again, every time we hear families have savings, families have savings. No, they're getting eaten up by inflation. Any families out there that were barely making it during the Rona are sure as hell doing way worse now. All that extra money that they got during the Rona, the stimulus checks and all that stuff, they paid bills with it, they did this, they did that. The problem is rent's going up, food, all that stuff has gone up. It's draining people. Interest rates. What about all the people out there that had to put stuff on credit cards? Struggling American families that put stuff on credit cards. And now Jerome Powell in the Fed raises rates 375 basis points for the year, which means your credit card rates go up. Anyone new buying a home, a car, any of that, all goes through the roof. People are all spending more money. All of that extra money goes to the banks paying interest rates. This is a total mess and a complete separation from reality. I'm sorry, American families do not have a lot of savings to go through, and your job is not to burn through their savings to slow down things. That is completely wrong. How about you slow your balance sheets down? How about you tell the banks out there, no, you have to hold more cash and reserves and have less of it lent out? How about you hold the banks back just like you're holding people back?
And so I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, but people are, the banks that deal with retail customers and many retailers will tell you that the consumers are still buying and they're still they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
It's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects. Although I think overall, I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given, but we know what our objective is and we know what our tools can do, and that's how we think about it.
Thanks. We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path is narrowed over the course of the last year, really. Hard to say. Again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining, translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think no one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by.
Real quick, I don't know if you just heard that. What he basically said is that the window is closing. What he's referring to is this. I have the inflation CPI data up on the screen. What he's saying is this. If we don't get this number down fast, that idea will become entrenched in the minds of people out there that costs will stay high. If mentally we keep saying costs will be high, costs will be high, costs will be high, costs will be high, things will stay like that. And what Jerome Powell is saying is that the window is super, super, super slow. It is very little. Sorry, not slow. The window is very, very little. We have a very little amount of time right now to really knock down that inflation rate. I am telling you right now, if on November 10th, when the next CPI data comes out, if that comes out and we are again sitting at something where the first number is 8 point something, we are going to be ready for a massive hit from the Fed. Because I'm telling you right now, again, if we keep dealing with inflation leveling off, that is going to be the worst thing in the world for the economy. The U.S. will destroy the rest of the economy by raising rates so aggressively without seeing if the effectiveness is there. Why? Because it hurts people of lower incomes.
By now, and it really hasn't. Although it has come down, but it's not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
All right, everyone, that was Jerome Powell and the Fed. Let's put the heat map back up on here right now. Let's pop open the camera because that's how we'd like to do it. All right, so basically here is the roundup. All right, let's just talk about everything that's happening right now. Okay, so the Fed came out. They hit us with the 75 basis point meet. We all expected that to happen. We saw it happen with the markets. Then what happened was that Jerome Powell started saying, hey, look, we are going to have to keep doing this. We're going to have to keep dropping the hammer. We need to get the Fed target rate back down to 2%. Now, what he's talking about right here is this. These blue bars on the screen, we have to get these blue bars to say 2.0, 2.2, 2.3. We need that. Right now, guys, we're at 8.2. We are in 8.2. The longer these numbers stay up, the more the world, the United States, the population out there is going to expect prices to stay high. If in your mind you expect prices to stay high, do you know what that means? High prices then become mentally normal feeling. Do you know how dangerous that is? All right. I have and real quick here, I'll tell you guys a story. All right. The danger behind that is what my grandparents talking about. My grandparents are from Germany. For those of you who don't know, my name is Klaus. I am the good Klaus. Klaus Schwab is the bad Klaus. All right. So my whole family's from Germany, both sides, whatever. Stories about how inflation and hyperinflation, they got used to it. They got used to it. And the moment they got used to it, that level of inflation that was high became the norm. Then what happened was they would have more inflation. That felt high, then that felt the norm. And it just kept going and going and going. And it led into hyperinflation. Money and all that stuff, okay? Money, there's two things with money. There's technicals, there's movement, there's stats in this, right? That's this over here. The other side is the emotion part of it. And what Jerome Powell is saying is this. I get the reports, I get all this, but if mentally we are preparing ourselves for inflation to stay high, we will be in deep shit. That's exactly the fear. That's why when we zoom out here, all right, and we go to the 5-year chart for inflation, if this keeps staying level here and we don't make that ski slope on the way down, deep, deep trouble, everyone. Deep trouble with Jerome Powell and the Fed. So what we're looking at right now is that the markets, right? Basically almost where we started, everyone. If we look back to the Jerome Powell and the Fed action, this is kind of where we started right here. XRP is below where we were when the Fed had their stuff, and that's what this is. That's why I said, so look, this is the story, and this is why we all did this. Here's the story. When the Fed came in, announced 75 basis points, boom, the market was excited because they're like, hey, awesome, they're not going to piss on us with a 100 basis point hit. But then Jerome Powell started talking, and the more Jerome Powell started talking about bringing this number back down to 2% as the target rate, the more he said, hey, we're going to keep knocking this down until we get things back in line. That is when you started seeing more and more negative price action happen. The same thing happened here with Bitcoin. You're going to see the same thing with XLM. That's exactly what we were expecting to happen in this meeting. Now, the scary thing about this is that when November 10th happens, the next release of the CPI data, if we do not see that next data set come out, and we do not see that number have a 7, 7.9, 7.8, something like that, if it does not have a 7, hold on tight, because December, I believe it's 13th and 14th. There we go, December 13th and 14th, Tuesday and Wednesday. That is when the Fed meets next. If on that CPI data it does not look good and there's not a 7 in front of it, expect the Fed to drop yet another nasty hammer December 13th and 14th. And the crappy part is if this CPI data comes out that we've all been following, and it doesn't show any big changes, then that's the signal to the Fed, well, wait a minute, maybe our stuff isn't working. And if it's not working, what can the Fed do, everyone? All they can do is raise rates even more. It's not like the Fed has a lot of tools in their toolbox. This is where this now sets this up for the rest of the world out there. The rest of the world is going to follow suit on what the U.S. is doing. Inflation in the UK is crazy. Canada, everywhere, all across the world, inflation is nuts. So they're seeing the U.S. here being very aggressive. That sets the tone for the rest of the market. U.S. spending affects a lot of the world. That's why we cover these things. That's why these markets here react so heavily on macroeconomic news with the United States, is because of the strength of the information. Now, let's look at this, all right? This is for the last hour. If we scroll back in time 1 hour, that is exactly when Jerome Powell and the Fed started talking. Check this out, everyone. Since Jerome Powell and the Fed started talking, the markets are down. The markets are definitely down. Look at this. And if we look at, that's now based on volume. Let's just blow it out to market cap real quick. Oh my gosh, coins and tokens, coins and tokens. See, mostly red across the screen, everyone. Mostly red across the screen. That is what we have to pay attention to. We got to pay attention to it because, man, this is going to be a mess if this stuff continues. All right, everyone, what kind of questions do you have? What do you guys got going on? A lot of stuff here with Jerome Powell and the Fed. Huge, huge mess, everyone. It looks like, I don't want to say it, crypto winter is going to last for a while as long as inflation stays at rates where it is, guys. These 8.0s, 8.2s, 8.3s, all this is way too rough for the economy to handle for a sustained period of time. Lots of worry here. Seriously, I'm very worried. If we don't see 7.9, 7.8 on this next inflation data set that comes out here in about a week, I think you're going to have more pain in the market. That's going to be one. We're definitely going to live stream that one. We're going to watch the market's reaction, and we're going to break down the inflation data. Because for those of you that don't know, whenever we go into these charts here, you can click on all of these. Like here, you could click on food. You could click on food at home, and then you could see, hey, cereal up 16%. Dairy and related products up 15.9%. So you could see a lot of consumer-based things that affect us, right? You and I are going through the roof, all right? So things we got to pay attention to. Energy, obviously, you guys know the deal there. War Galley says, the fire sale for crypto is going to continue for now. War Galley, you better believe it. That is exactly what's going to go on. Right now, you will not see massive inflows in crypto until massive amounts of money are available. And how can massive money amounts be available when fuel oil is up 58.1%? Gasoline is up 18.2%. And Party Farm is right. Powell said you do have more time to accumulate because he is going to keep dropping hammers to get that number back on down. So yes, for everyone out there that says, oh my God, we're going to moon tomorrow. No, that's not the economic condition that's setting up right now. Across the world, inflation is a problem. Across the world, central banks are raising rates. Across the world, incomes, right? Lower income families are choking. Across the world, kids that are just out of college, kids that are just out of high school in the working world right now are paying more for rent, more for food. Their credit card bills are going up every month as rates go up. Families that struggled during the pandemic when they lost their jobs, they couldn't buy a car because they were on unemployment, because the government forced them out of their jobs. Now those same families that put off buying a car, guess what they have to do? They got to spend 20, 30% more on cars. They have to save, they have to scrape. So now those cars are going to cost a more base price. And the loan amount is going to cost them even more. This is not just a problem with the United States, everyone. This is a problem we are facing across the globe. Governments and businesses out there are not doing things that are best for the people. They're doing what's best for themselves. How many of you out there working have worked for a business where you were told one famous line? Work harder, right? Work harder. What if you're a nurse, right? All the layoffs, work harder, see more patients, fit it in, work faster. That's what businesses are telling people out there. The problem is maybe these businesses should start, I don't know, cost cutting on other things. I don't know, leisure, travel. How about some of the whining, dining, and 69ing? See, the problem is the elites out there control the money. And when you control the money, well, everyone, you get the idea of how that works. Jerome Powell and the Fed, why do they raise rates? Well, it's actually pretty simple. The reason they raise rates is because our government, United States, Canada, Mexico, you pick whatever government you want, and I'll say, you know what, I'm probably right. Governments out there aren't making it easier for businesses to do things. Governments out there did force industries to shut down. And what, the same governments are sitting there going, well, wait a minute. We forced you to shut down. There's not going to be any repercussions to it? Come on now. The border between the United States and Canada was closed for how long? Wood mills in Canada could not send lumber down to the United States, causing a soaring rise in prices. You're right, everyone. We should have put the world on hold for what reason? And we're dealing with it now. We are dealing with it now. What upsets me about all of this is Jerome Powell saying that families have savings to withstand this. And what I say to Jerome Powell is, it's because you've been hanging out on Wall Street too much. You need to spend time in Main Street, in the towns where I live, town where you live. All you got to do is walk around in D.C. and see the homeless camps, bigger than where they've been after, God, I can't even tell you how many years. And I go to D.C. all the time. What about all the homeless in Vegas that's growing? The people that live under the tunnels. California has a rampant homeless problem. None of these things are getting fixed, but the rich keep seeming to find a way to get more and more money. I'm not anti-government. I don't want anyone to take that wrong. I am not anti-government. All right? What I'm about continuous improvement. Always work on getting better. I don't think our government should need to get bigger. Just get more efficient. I'm not telling the government to work harder. I'm saying let's find ways to be more efficient. Maybe we can streamline processes. Maybe we don't need so many darn steps of red tape, because think, every time you have a step of red tape, what do you need? You need to hire more people. Any of us here that have dealt with the governments know exactly how much of a hassle it is. They don't make it easy to work with. When things aren't easy to work with, what does that mean? It costs you more because they're inefficient. I know I've got a whole bunch of viewers out there that live in the upper Midwest where I used to live. You guys know the drill. Make the road good enough so that it lasts for a couple years so that we can get more tax money to repave the road. Very different than how they do stuff in Europe, right? See, in Europe, especially in Germany, when they build roads, they build them to last longer. It costs a little bit more, but in overall, the cost is way cheaper to people because the roads last longer. Out here in the United States, what's the theme? Spend the money that you have on this year's budget. Why? Because you might not get it next year. There has never been any company out there that I have ever worked for that has not kind of looked at it that way with cost cutting, using you as the tool to cost cut. Labor. They always cost cut labor. Screw it, let go people. But everyone else out there now has to work overtime. Meanwhile, we've got 30, 40 managers, vice presidents all over the damn place, shuffling paper and emails between each other. And the worker, the floor worker, gets the biggest hurt. Think about that. And all of the stuff that Jerome Powell was talking about right now, about families having more savings, the economy is strong, we're in good shape. Go hang out in one of these cities, dude. Go talk to people. Families where, yeah, maybe they did make some more money here over the last couple of years. You're right. A lot of people did get fairly decent raises here over the last few years. But prices wiped it out. Prices completely wiped it out. So what's the point if people make 10% more money if their costs of all their consumer-based stuff goes up 20, 30%? How are families out there going to get through all this? Jerome Powell and the Fed are going to keep choking the economy until this rate here gets to 2.0. Let me ask you a question. Who uses credit more than anyone else out there? Two groups of people. People in need and people that want to expand heavily. Those are your two groups of people that use credit the most. The people that want to use credit to expand heavily, guess what they normally have? They've got cash flow coming in which can sustain that expansion. But people that use credit to get them through, right? You have a medical bill. Let's say, hey, something happened during the pandemic, right? You had to go in. You had to get coverage for something, not Rona related, but something else. You had to pay for it. Now your credit card just went up how many percentage points because of Jerome Powell and the Fed? So stuff that you bought last year on your credit card is now going to be costing you more and more and more and more. A complete mess. And Jerome Powell, the Fed, the United States government, it doesn't matter if you're Democratic or Republican. It's the system, everyone, that's completely disgusting. It's the system that constantly screws over the poor. Do you guys remember when a whole bunch of everydayers and usuals out there were making money on GameStop and how the big banks were pissed? Do you remember the one guy on TV that was pissed because his hedge fund lost $2 billion? And all of a sudden he's like upset because people are making money off him. He's like, that's not fair. No, what's not fair is the system that we live in. Always live in. And that's a mess. That's what bugs me about all of this. Now, as we get back to the market, we could see everyone more price erosion. The market right now is dealing with what we've been talking about on this channel for a long time. Delays cost you money. So if the Fed can't get the inflation rate down, if our damn governments can't work on supply chain issues, then yes, we're going to have more and more problems like this. The market is telling us everything that this channel has been talking about over the last couple months. Prepare for more pain. Don't expect things to go through the moon. That's not going to happen right now. That is not the situation that we are in. Right now, we are in survival mode. The market reacted. Look, when Jerome Powell and the Fed announced it, all right, 75 basis point, boom, this was the market. But then once Jerome Powell started talking and started saying, hey, we have to do whatever we can to keep things going, to keep things down to that Fed rate, we have to do this. The market reacted with negativity. You can see it here. Bitcoin down 0.75%, 20,300. Ethereum, told you everyone, Ethereum couldn't hold that 1,600, could they? We watched, they barely broke the 16 and retraced on their way back on down. XRP pulling back over the last hour, sitting at 45.6. XLM got under that 11-cent mark during Jerome Powell's talking. That's my point. That's why we do these videos, everyone, so that you could see the market reacting to the news and then the market reacting to the projection. That tells you how to price this in and how to strategize it. This lets you know that when we start looking at the next CPI data, what are our expectations, everyone? She better be in the 7s. Homegirl better be dropping a 7 as the first number, or else Jerome Powell and the Fed are going to get some Viagra, and they're going to drop some even bigger meat on the table. If December they drop another 75 basis point hit, you know what your Merry Christmas is going to look like? Merry F off, miss. That's what it's going to look like to the common person out there. Another 75 basis point hit. And let's be real here. Let's not just think short term. Jerome Powell said this too. He said, we will continually do what we need to do. This will be a sustained effort. We will not stop until we get it there. We are going to take care of this. Guys, we have a lot more pain to come. We have a lot more pain to come. With the Fed fund rate sitting at like, what, 375 right now? You guys, we're looking at the Fed fund rate potentially hitting 6%. 6% by like June, July of next year if things keep going in the path we're on. 6%. Now, I don't expect every month to be dropping a 75. I guarantee you that we're going to see more. We're going to see more. And the scariest thing about this is someone asked out there, how fast do we want this target inflation rate to go down? You want it to go down as fast as humanly possible, all right? And here's my example. In 2008 when that happened, let's draw. In 2008 when that happened, all right, this is what we're looking at. Inflation spiked up here, and then you see it, boom, went right back down. That's what we want. We want that action right here. We do not want where we see a flattening out. That is not what we want. And when you look at the chart, when you go back here, when you go to the 5-year, you can see we are flattening out right here. That is the least, Jesus, that is not what we want. All right, so Jerome Powell and the Fed dropping a 75 basis point hit on us. The market is telling us, hey, we expected 25, but what do you guys think? I have a feeling that Bitcoin might go under 20,000 today, everyone. Yep, I kind of have a feeling. Looking at the erosion happen on the charts right now, you just need a little bit more negative news just to tip that bad boy on down to under 20,000, causing more liquidations. The other thing we got to look forward to is CPI data coming out next week. Yes, everyone, next week, Thursday, is when the next CPI data comes out. Again, we're looking for something to hit in the 7s. If there's anything you would like to talk about, please let me know. Otherwise, what we're going to do is we're going to start winding down the stream. Let's do this. Let's shoot for a 4 p.m. Eastern time stream end. Let's shoot for that. So say your thank yous, ask your questions now. Because the big thing right now, everyone, is Jerome Powell in the Fed dropping those hits on us. They're dropping it on the market right now, and it is really creating some problems. What really has me shocked here is look at this. Look at this false pump right here from the news of the 75 basis point hit. Only to come down lower than where we even started before Jerome Powell and the Fed started talking. Think about that. Let's just draw that out here real quick. And again, if you have any questions, comments, anything like that, now is your time. All right, so here's what happened. When Jerome Powell and the Fed talked, this is the movement that happened right here. All right, this initial hit from the bottom to here. That's when they announced the 75 basis point hit. Then as Jerome Powell and the Fed kept talking, look, the market's like, oh, crap. Oh, crap. Yeah, he's going to drop us. Oh, my God. Yep. That's exactly what happened, everyone. And you're going to see the same thing on all of the other cryptos out there. There you go. Look at Jerome Powell and the Fed. He talked. Then the market retraced, man. Total mess. Doan Yates, Doan, what's up, dude? Says, thanks, Klaus. See you soon. I appreciate it. Thank you very much, Yates. DVR says, they're too late. They're working on bringing in the new financial system. We're in deep crap. We are in deep crap, everyone. Same thing, look at across the board. XLM, same thing, lower than where they were before Jerome Powell and the Fed was talking. I mean, even Cardano, look, the whole market reacted the same way to this, guys. Jerome Powell and the Fed, they're going to keep dropping it. Now we got to start looking towards next month. That's why these big dates. You guys want to know what's cool? And Nico, thank you very much for chiming in and being active on the chat. I really appreciate it, Nico. Nico says, have to go. Take care, guys, and great stream. Klaus, no, it's great because I got great fans. Remember that, Nico. It ain't me, it's you guys. But you guys remember how I do these like monthly videos? Right? The monthly big dates videos that you guys see up on the screen. The reason I do these monthly big date videos is because I'm trying to give you the information and the stuff that Jerome Powell, the Fed, and other market makers out there are using to make these decisions. These calendars here have all these big dates on everything that we are dealing with in the market. So if you want a really good resource, look for the ones that have the calendar on it, and you'll see it. This one will have November 2022 on there. Really great video to watch because it has all the big dates that we're talking about for this month. And that's actually, everyone, why I had November 1st and 2nd in red. Yes, because Jerome Powell and the Fed. Eduardo says, how did the Asian market take the news? I haven't checked the Asian market. That's a really good question. I'm gonna have to, and actually I'm gonna watch the Asian market tonight. You're gonna see the Asian market react more when the US market closes, because again, money shifts to what's open. So once the US market closes and Asian markets are gonna be the only things open versus the US, you'll see more action then. Keisha Johnson says, thanks for keeping it real. Keisha, seriously, thank you for watching. I really appreciate it. I'm so glad you got to join us. First time I have seen a comment for you, so thank you very much for a new commenter on the channel. Bo Rabbit's crying over there. Bo, you can't cry. You're in Florida, my good man. You saw the people out in Canada that are worried about the cold weather. Cheer up, kind sir. Yates Doan says, that feeling, hoping they might take the foot off of our throats. And in case you guys didn't notice, did you see the little naughty I put on here? Hold on, everyone. I threw a little Easter egg out in here, and I'm going to show it to you. I had a little thing on there, the video I did today, right? It was the thumbnail for the video I did today. And the reason I did today's thumbnail, and I don't know if any of you guys saw it, I'm going to zoom in so you could see it. You know why? Because look, everyone, Jerome Powell's wearing a name tag, and you see what his name tag says? That's right, you call me daddy. You call me daddy. That's what Jerome Powell is saying right now. Hello, my name is Daddy, and I am the one that rocks the markets. Jimmer365, another channel member here, saying, what's up, Klaus? Been a while. Thank you, Jimmer, for chiming in. It has been a while, but just because it's been a while doesn't mean I still miss you more and more and more, guys. Warrior Alley says, stuff hasn't crashed yet. Yeah, I mean, we've had crashes, right? Think of Luna, right? Big crashes. The problem is, though, we're going to have more issues to come as Jerome Powell and the Fed keeps raising rates. Much more pain ahead in global markets. I completely agree. I am totally with you on that. AmuseBot says, thank you, good sir. No, thank you, good sir, for watching. Thank everyone for watching. Guys, these live streams are kick ass, man. How many of you guys are seeing value in this channel as we break down macros? How many of you guys out there have ever watched a full Jerome Powell speech? Isn't this kind of cool? What I love about this is that I get people involved or help people become more involved with what's going on right now with the markets. And that's pride. Like, I love that kind of stuff. I love the talking with you guys, the interaction, people here reading in between the lines and all the juiciness. Jimmer365 says they keep weeding out the weaklings. No, it's totally true. They are weeding people out step by step by step, and you can see it in the erosion of the markets. DVR says, thanks, Klaus. Let's stay strong and hold on to your ISO 20,022 tokens. That is my plan, everyone. Is definitely my plan. Andy or Andreas, right? Andreas, what do you think when people are having enough of this whole crap and stand up for themselves? Jerome's standing up there on the ladder, pooping down on all of us, and we're taking it as usual. All right, here we go. I put a phrase out on Twitter, everyone. On Twitter, yes. And my phrase on Twitter was this: you don't always need to use a French Revolution style of doing things. You just need to know when is the right time to use the French Revolution style of doing things. Keep that quote in mind. Kevin Ridley chimes in, Klaus, totally enjoying your take on the markets. Long-time watcher, first-time writer. What does this mean for XRP? Hey, thanks, Kevin. I love it. All right. So what does this mean for XRP? Right now, XRP market is this. We have two big dynamics. We have macros, which are massive. But we also have the SEC case. The SEC case, I don't see them settling anytime soon. I don't see case resolution anytime soon. I see the SEC as being heavily entrenched, thinking, hey, look, we are using this as the tip of the spear to go after the whole market. We are using SEC LBRY. Those are the two cases, right? They're using those as the tip of the spear. I don't see them giving up on that. Now, since I don't see them giving up on that, I see XRP reacting more to macros. Now, what does this mean for XRP? I think, guys, we're going to be going sideways. I think we're going to be range bound for a while. Until cash starts flowing, which it won't happen, not at this rate, because remember, cash flows when money is cheap. Money's not cheap because the Fed keeps raising rates. Code Core says, hey, what is your Twitter? Well, okay, hold on. Here is my Twitter. I am, hold on, where am I? I'm this guy. I'm at Hobbies and Cards. That is who I am. Let me see, can I share this with you guys? Can I share this? Here, Twitter at Hobbies and Cards. So I'm going to go on here. We're going to go to the channel page because I love you guys so much. We are going to go to here. We're going to go to community. All right, hold on a second here and put want to join my Twitter. I am not the king twit, by the way, or chief twit. Want to join my Twitter? Boom. There it is. It's right there, Hobbies and Cards. We'll add a little image on here. We will select this. We're going to make our Twitter logo because, yes, I have a Twitter logo saved. Boom. There you go right now. So if any of you want to join my Twitter, it's right up on the screen right there. Twitter at Hobbies and Cards. Gary Tollin chimes in, and Gary says, more involved, more aware. Gary, do you know how much that means to me, man? Do you know how much that means to me, knowing that people are taking a more vested interest of what's going on around them? Hey, Gary, it's awesome, man. It's awesome. Kevin Ridley chimes in. This is the only time I wish Daddy wasn't coming home anymore. I appreciate you. And if you guys don't know what Kevin is talking about, well, I did a video out there, and my thumbnail gave Jerome Powell a little bit of a name tag, because Jerome Powell says, hello, my name is Daddy. All right. Let's see, anyone else got any other questions, comments, anything like that? I am so excited to see so many of you watching, so many of you hanging out. Today has really been a very big day. I'm sorry with anyone if I ever got frustrated, emotional like that. I love this kind of stuff. I have just a lot of passion, a lot of excitement towards it. And no, I'm not a populist player like people out there, BitBoy, but what I really care about is people. I really care about the everyday people. My work career was dedicated around that. I hated upper management. I love the workers, and I'm noticing the same things here in the States. I love the common people. I cannot stand the aristocrats. I cannot stand the aristocrats. It pisses me off. AmuseBot says, that's what she said. Well done, Michael Scott. Oh, you mean like my hoodie? There you go. Bitcoin right now, everyone listen to this. Bitcoin in the last hour is down 1% right now at 20,300. Ethereum right now down 1.47% at 1543. Ethereum couldn't hold 16. Bitcoin couldn't pump past 21. And now we're seeing retracements. Guys, I'm telling you right now, November 10th is going to be an amazing pivotal day because that is when the next CPI data comes out. That's what the Fed is going to use, that and the Beige Book and the employment situation reports. So let's pay attention to all of that stuff. What I am going to do right now, I'm going to give you guys, you got 4 more minutes. Get your thank yous in, your questions, comments. Oh, and make sure you guys too, make sure you say bye to other friends in the chat as well. Remember, this is a community where we all work together, and I really want to make sure that, you know, we all say hi to each other, we all say bye to each other, we all work with each other because there's so many cool comments that I see between everyone. So just make sure you guys say bye and your thank yous to each other in the chats as well. Michael Lopez jumps in and says, pain until the first quarter of 2023 from the sound of things, and who knows, but hopefully up from there. I'm thinking the same thing. I'm not expecting much action, honestly, in the first quarter. You know, I don't know. I think it's still too soon, guys. I think the first quarter might still be too soon. I think you still might be seeing extremely aggressive rate hikes from the Fed in first quarter. I wouldn't be surprised if between now and the first quarter, we see 2, if not 3, 75, 50 basis point hits. I don't think we're going to see those 25-point hits at all. Mike Stew says hello from Ireland, drinking beer, loving the videos, Klaus. Mike, I'm sorry, I cannot join you in drinking beer. These are my branched chain amino acids post-workout drink because I'm training for like a super like technical like hard hiking climbing thing. So I got to make sure like as good as possible. So enjoy that beer for me because I have to stay good for quite some time. Michael Lopez says, see you all in December. Code Course is cool. I appreciate your awesome energy and enthusiasm. I like your channel. I followed your Twitter. Well, thank you, Code Core. I appreciate it. And if any of you out there want to follow me on Twitter, how do you follow me on Twitter? It's actually pretty easy. Just go on the channel page, go to the community tab, you'll scroll down, you'll see a link to the Twitter, and you'll see a link to the Discord. You know what's the coolest thing about the Discord, everyone? The Discord is run by the fans. That's how decentralized this channel is. Isn't that freaking cool, everyone? All right, what else do we got? We got Mike John. Do you like XLM or no? Thought they signed a couple good banks recently and they have half the supply of XRP. I like XLM. What I don't like, though, is that the market is going for hype, not utility. That's not XLM's problem. That's the problem with the maturity of the market. Don't confuse those two, okay? Don't confuse poor performing XLM with the market only wanting sexy. Don't confuse those two. Just be very wary of that. Jimmer says little pumps over the holidays and then maybe a boom. Jimmer, I hope the Fed in that second week of December when they do their rate hike, or first week, I hope the Fed does not go crazy and drop another 75. That would be a horrible Christmas. You would hear a lot of companies doing layoffs if the Fed dropped another one like that. Andrea says, all right, Klaus and community for the last hour. Love your work and the emotions you put in the videos every time. Hope to see all of you guys again on November 10th. War Galley chimed in, put on the hat. Damn, I had it right here, buddy. I got your back. And remember, Andy is Andreas, all right? Andreas. Chris B says Doge is sexy. And that's my point, Chris, right? The market right now sees Doge as sexy, sees XRP as sexy, BNB as sexy, stuff like that, right? Things that are in the news. What about Luna Classic? Right? I mean, think about Luna Classic. That's like the perfect example of sexy where it shouldn't be. There is no real reason that Luna Classic should be sexy. Let's be honest here. But people are playing it like it's hot as could be, man. Like it's nut stuff, everyone. Let's see. Mike John says markets didn't even go down that much after the hike. I thought it might be worse. Mike, get ready for this one. Get ready for the 10th of November when the next CPI data comes out. If it's not good, the markets are going to be bad. The markets will pre-price in negative action if the next CPI data comes out rough. They will pre-plan it in. You'll see it when they release that data, and we'll live stream it. Don't worry, everyone. We'll live stream it. We'll have the markets up and all that kind of stuff, right? We'll live stream it because at 8:30 a.m. Eastern time on November 10th, that is when the next CPI data comes out. We'll do the same thing. We'll have individual charts up on the screen for all of you guys. We'll have the heat map up so we can see kind of what's moving in the sector and all that. We'll have the chat up. We'll have all this up. We'll do it live. We'll start the stream before the release of the data to see if the market pre-prices in stuff. We'll be streaming as the action hits so we can see how does the market react to the moment. And then what we'll do is we'll stay on just a little bit longer to catch what the market's reaction is after, right, as the news filters through to the public. Matt Parada says ETH's value is as much as Toyota. Isn't that insane? Totally insane. Mike John says utility will prevail in the end, not sexy. And I think that's the maturation process, Mike, that we're looking for. I understand sexy. Trust me, everyone understands sexy. But just because you're sexy now doesn't mean you're going to be sexy later. How many of us knew of those ladies out there that peaked early? Oh, ladies, don't worry, I got your back. Hey, ladies. How many of those gents peaked early in high school and college and as they got older got a little dad bod going on? See what I'm saying? So there's sexy and utility. Right now the market is focused on sexy, not on utility. DVR says, hit the like, everyone. Show the man the respects he deserves. See you all soon. Thanks and stay strong. With that, what I am going to do, I am still going to be here. I'm going to allow you all an opportunity to say thank you to each other, say bye to each other, say hi, bye, whatever you guys want to each other. I'm going to fire up some music. I'm going to kill my mic. I will chime in every so often, and I'm going to give my throat a little rest, but I'm going to hop in on the chat and talk with you all. Let's get the tunes up. Catch y'all later, everyone. And later, Jimbo Tango, I do greatly appreciate it. And again, I will say sorry, you are not just a channel viewer. You are a super supporter. We may have to call Jimbo Tango Daddy. Ooh, DVR chiming in with a little bit of German, huh? Don't forget, guys, Chris Kindlemart is coming up soon. Yes, Chris Kindlemart. Allez au revoir, mes copains. Yes, everyone, it's not just German, but it's French that I speak as well. Yeah, and real quick, while I got some of you here still watching, check out the action right now in the market. We are definitely seeing some low prices here at the end, guys. Ethereum down 1.5% in the last hour, Bitcoin down 1%. The market is reacting more. Robert Melvin says, La Belle Ville, eh, Klaus? Well, you know, the beautiful place, right? The beautiful town. Quebec, I love Quebec and Montreal, right? Oh, real quick, and I was a Quebec Nordiques fan, just to throw it out there for you guys. Now our message from the Supreme Leader, the Supreme Commander of the XRP Army, Ben Armstrong.
I am the Clit Commander.
Anybody, but a lot of people in the XRP community, like, they're a little delusional from time to time. Like, I remember talking to a guy that was like, hey, it's going to $10 by Christmas.
I remember when an influencer was shilling Pump. I mean Pamp. Yeah, how delusional was he?
And this was in, like, October 2019. You know what I'm saying? Like, that wasn't going to happen. And I am the master and commander and supreme leader
of the XRP army.
With imagination, I can be anything I want. A pirate. Arr. A football player. Hop.
A starfish. Now, what does that mean?
I don't give a shit.
That means that just with a wave of my hand, I can send the XRP army out to do damage all across this great nation.
Pakistan? Pakistan! That's a fucking camel!
Yes, everyone, a camel. Thank you very much for watching, everyone. This was a great stream. I will catch you all later.